We are live.
We are live. It's Senate Finance. Once again, we are eating lunch committee. Is that time of year? Okay, we are going to start. This is the health insurance pools, and this is 585. What is it?
Yeah. It's 585.
Yeah. So anyway, talks about looking at associations and pools, and you were recommended to us. You were a regular in this committee at one point in time.
Quite a while ago.
Yeah, quite a while
Quite a while ago.
But we're still here. We're still working on health insurance.
Glad to see it.
It's good to see you, and you know the routine. Just introduce yourself and the floor is yours.
Christine Oliver, NFP. I really appreciate the time today. I was in House Healthcare last week and I didn't really recognize a face, and it's a little daunting. It's been a long time, I'll admit that, but coming into this committee. Yes, it was Michigan. So I'm with NFP, which is a national broker firm. In that capacity, I oversee the Vermont benefits practice, where we work with employers all across Vermont to put employee benefit packages together, which includes your health insurance, life, disability, vision, dental, all the things you think about as employee benefits, with health insurance being the front runner of. That's what people use day to day. That's one that costs the most. So we're very in tune to the health insurance situation here across the country. I was previously a senator. Cummings mentioned the deputy commissioner of the healthcare administration within Bishop. And why that's relevant for so long ago is because way back when I was there when the Affordable Care Act was passed. And I was there when we were starting to have discussions about what are we doing with this exchange. The party line at the time was you needed 1 million lives for an exchange to be successful. So we talked a lot about, like, do we do a multi-state? How do you do that? You know, which way are we going? And we, of course, decided against the multi-state. That had its own problems with different regulations of each state. But we always knew this hanging over our head was, it's going to be hard to have an exchange with less than 1 million lives, and we're never going to get to 1 million lives. So I give that just as background for some of the things I want to talk about today. So risk pools and funding. Sorry. Okay. Just kind of as a starting point to talk about, people are pretty familiar with the exchange. So in the exchange, you have small businesses under 100 that are fully insured, and everybody pays their premium. Whatever their claims are, their claims are. They paid their premium, they're done. If their group's claims are less than were expected, the carrier, Blue Cross or MVP in the situation, keeps that money. And if they're higher than were expected, the carrier pays those claims. So that's your kind of basic understanding of insurance. We do a lot of, and then on the opposite spectrum of that is self-funding, where the group decides, hey, we're going to hire a carrier to pay claims and process and do that administration, but we're going to pay for the claims. We're going to hold this pot of money and self-fund with our own money whatever claims are. So in the middle of that is somewhat of a sweet spot for Vermont. Our colleagues across the country, they're shocked at how much level funding we do in the side range that we do. Because I'm in the region with Boston, New York, and they just don't think about these things for smaller groups because they quite frankly don't have to. What the level funding is it's a toe in the water of self-funding. You still come up with a premium. Carrier helps come up with a premium, which is to cover claims. But at the end of the year, if your claims are below what were expected and planned on, you can share in that savings with the carrier. And there's no risk if you go above. So it helps give you a little bit more potential to save without a lot of exposure of risk on the outside of that. So those are kind of the 3 funding models that we deal with the most. And the thing I want to say about that is, so on the exchange, which we're most familiar with probably in this committee, That's only 25% of the commercial market. And we know all the troubles that come with the exchange. People, small businesses on the exchange are struggling. You see increases, people can't decide how they're going to retain and attract employees. They're trying to be competitive in their industry. All very valid, real issues. But I would suggest those are the exact same issues that every 75% of the business outside of the exchange deal with. They are still trying to be competitive in their industry, hire and retain employees, avoid layoffs. They're all at the core of like what Vermonters need in their business. They're your retailers, they're your nonprofits. You have childcare centers, contractors, you name it. The only thing different about it is where they're purchasing their insurance. It's not, the insurance is pretty much the same thing. When we talk about coverage, coverages are fairly the same. We talk a lot about cost share. That's where differences come in. How much do you pay on a deductible? How much is your premium? What's your out-of-pocket max? Those things change, but by and large, coverage is coverage. And the businesses buying inside and outside the exchange are pretty much the same. Until you get over 100. Businesses over 100 that can't buy in the exchange are still the same. They're still dealing with the same cost pressures, still in the same situation.
Over 100 employees.
Yes.
Yeah, correct.
Sorry. Then that's when they're not eligible to purchase in the exchange.
Okay.
So I appreciate this committee and this legislature's focus on affordability. We know that it's like, it pops up for Vermonters in every avenue of our lives. Really appreciate the bill last year, which turned into Act 55, the specialty drug bill. So I would suggest that bill has done so much good, and we see it already. The beauty of that is it really was applied, it's applied across the board. So businesses who are in the exchange, outside the exchange, have Blue Cross or Cigna or MVP, everybody's getting the benefit of that downward pressure on specialty drug costs. And it's significant. That's why you pass the bills, right? That's the amounts that were being charged were so huge that it really was an ability to put pressure on pricing and everybody wins. So when you look at, I know there's 585, there was also S190 that talks about reference-based pricing or other association health plan, all the things that you're talking about that could deal with those pressures. My only suggestion is let's not apply it to 25% of the market. Let's apply it to the whole market because everybody's suffering from the same situations. I'm currently working with a nonprofit organization who is facing a 38% increase on their health insurance. They're not an exchange, they're not eligible for the exchange, but we have similar groups that are on and are off who are in the same situation. And it's not just, we talk about premiums a lot, but, and because that's the thing people identify with, and we do a lot of things to keep premiums down, but that's not the only cost. People are paying deductibles that are getting higher and higher. So when we talk about things that help keep hospital charges or claims down, that's just not a benefit to the insurance company. That's a benefit to those paying the premiums, those paying their deductibles, and for the employers who are, as deductibles get higher and higher, they often offer a HRA, a health reimbursement arrangement. To limit the impact of that higher deductible, they'll agree to pay a portion of it. So all those things, again, I'm just trying to reiterate that they impact everybody. And to single out one small piece of the market, I mean, it's nice for anybody to get to relief, but there's no reason that everybody shouldn't get some relief if you have the ability to do so. The discussion about association health plans, so again, when I was at Fishka many moons ago, there were so many association health plans. And, you know, we had like your medical society, the dental society, and what we would call the air breathers, who were just a compilation of businesses working together, and you know they were association as well. When the Affordable Care Act came into being, those association plans pretty much went away. So we were without them for a long time. The exchange went into effect, and then about 2018, there was this little window of maybe they're okay again. So we came back. we in fact developed, with Blue Cross and Association Health Plan, trying to mirror some of the plans that were already on the exchange. And that lasted a year and a half, maybe. It was in effect about a year or so, and then we kind of had to unwind it based on different state and federal regulations. At that time, I was trying to figure out what it pulled from the exchange, because I know that's always a question, like, well, if we do this, what's gonna happen to the exchange? And I believe, though, Blue Cross, I'm sure would have the exact numbers, there were about 100 groups that ended up purchasing association health plans. Maybe around, I'm looking for it. It's not in it. I would say like 2,500 lives. But those didn't all necessarily come out of the exchange, they could come from anywhere. I think it's always good. But after the associations went away, we then created with Blue Cross one of these level funded products where smaller sized groups could get into this level funding, that mid-tier I was talking about, a little toe in the water, not have huge exposure, but have the potential to get returns if their particular groups did well from claims perspective. So I think any option for businesses, for all businesses, is very helpful, because we don't want to tie somebody's hands. We don't want to be like, well, you can do it, but you can't do it. So anything that levels the playing field, lets people be able to make choices for their businesses and their employees, I think is a good thing. I'm not sure, again, if it went into a place, what effect that would have on exchange. Sure, people would come out of the exchange. People were going to come out of the products that they're in right now, maybe. It's going to take a whole analysis to see what's better for any particular business. So I think it'd be really hard to predict, but there would be movement in some fashion, as there is with any new product. So with that, just ask their questions.
Okay, Senator Hardy.
Thank you. So, I was trying to pull up the bill, but I couldn't do it fast enough and also listen to you. But I think what I'm hearing you say is that you're supportive of the provision in the bill that would allow for the association health plan. Because then you feel like it would be it would provide options and level the playing field across inside and outside of the exchange.
Yes, but I also want to be clear that I don't think it's a magic bullet,
Yeah.
right? There's nothing.
There's
that's gonna be
no
like,
magic
oh, this is
bullet.
gonna save the day.
Yeah.
and-
But so good. I'm glad I understood what your position on that. And to the concerns about what would happen to the exchange. I mean, do we get to the point, or could we get to the point with a whole series of things happening, maybe this plus other factors, where the exchange just collapses, we just can't maintain it anymore because it's not big enough?
Well, right, like I say, from the beginning, we were not sure how long the exchange could be in existence, just because you don't have the critical mass. So
Yeah.
by design, it's in what they call a death spiral, right?
That's a technical term.
that individuals for sure, but nowhere else to go from there. But as we know, individuals in exchange by and large are subsidized to a degree that,
Not anymore, though.
well, the enhanced subsidies went away, but there are still significant subsidies.
Yeah.
And depending on the poverty level, certainly they drop way off, but
Yeah.
there's still a significant piece of, and I think it's like 80%. Now that's going to range. For some, it's going to be a lot of help, and some it's going to be a little bit of help,
Uh-huh.
but there is some help there for individuals. And then when you look at the small groups, one of the good things, again, that the legislature did was demerge those markets within the exchange, because when they were combined into one pool,
Mhm.
then we had just small businesses subsidizing individuals,
Yeah.
right? So that was a nice move to not make just
We
those small
discussed it
businesses.
a zillion
subsidized. I'm sure you did. But I would suggest, and some feedback for this committee and the legislature is that was very helpful to small businesses,
Mhm.
who are always facing these same issues.
So, but if this move and other things lead to the exchange collapsing, where do the individuals on the exchange that rely on it for their individual plans, where do they go?
I would suggest they go back to where they were before, like you would go to Blue Cross for an individual plan or MVP potentially for an individual plan that's not community rated, right? So the benefit now is that that exchange is community rated, but meaning all their experience goes together to come up with a rate.
Right, but would their
But it's
rates be
high
much
right now.
higher?
Well, already I would suggest they're pretty high because the
Yeah.
people in there are generally high.
And can they get the federal subsidies if they
Well,
go
if there's no
directly?
exchange, I have no idea what to do, happen to the subsidy.
Yeah,
That's just a tough question, right? It's
Exactly. Well, that's what I'm
making
asking
the
you.
future.
it's trying to figure out what do we do for those people? And
Right.
I mean, I don't know. I
But
don't,
like the
know how much
collapse of the exchange, we knew it was gonna struggle from the get-go. Does that mean it disappears? Or does it mean it continues to go along as it has gone? So they had some significant increases early. The Green Mountain Care Board has been able in recent years to push back on those hospital rates and the rate. Insurance carriers keep the rates lower,
yeah,
more manageable. I mean, all those things continue to help. The legislation from last year, keeping specialty drug costs down. That's huge in keeping rates down and everybody's ability to pay claims.
mhm,
So when you talk about things that maybe wouldn't hurt or that would help the exchange and help people outside of the
Right.
exchange. So reference-based pricing, sure, that's definitely a cost saver. And I'm not ignoring the impact that's going to have on the hospital system. And so I think we have to find like middle ground there or
Yeah.
a middle ground. But I know Blue Cross has done this study already and talked about applying it. So the S-190 talks about applying it just in the exchange. And I'm not in favor of that, but if applying that across the board is too much for the system to handle, which it may very well be,
mhm.
then let's start with, you did specialty drug last year. Blue Cross is prepared, information I've seen, to go next after lab services and imaging. Which if you cut the cost on those to reference-based pricing, some percentage of Medicare, that again is gonna help across the board. Everybody's gonna benefit from that. And it gives you another step further,
Yep.
another step closer without further, kind of nitpicking at the exchange and trying to figure out what to do with it. Anything across the board, then gives people their same choices of, hey.
I
what do you
totally,
think?
I totally hear you and I agree. And I'm just concerned about pushing people out of health insurance and having higher numbers of people just be uninsured. I mean, one of the things that we have been doing well in Vermont for the last 20 years is making sure that we have almost everybody insured.
Right.
And that's already changing after the subsidies going away.
Well, the subsidies going away definitely impacts
Yeah.
individuals.
And so now more people are definitely underinsured
Sure,
and probably uninsured.
right.
So
But
trying to prevent doing more that's going to impact that or offsetting
Right.
that impact.
well, what I think that the reference-based pricing, even reference-based pricing light in just two areas does,
Mhm.
is it the biggest part of premiums in the healthcare system is claims, right? We all have claims. Claims go up. We know trend, even if the same claim today is going to cost 12% more next year. So when I think you push on the system in that way, I don't think you're contributing to people being more uninsured. I think you're making things more affordable. You're making businesses be able to continue to offer.
Yes, but if we're allowing more people to go off more plans to go off the exchange in order to do association plans. And I'm not, let me be clear, I'm not necessarily opposed to that. I just want, what do we offset that with to make sure that the people who are left on the exchange don't get
Well, the reason that's a lesser concern, is that across the board help, whether some small businesses leave the exchange,
Mhm.
that's not going to impact the individuals on the exchange because they're their own pool,
Oh, right, yes. Okay.
right?
Uh-huh.
So that doesn't negatively impact them at all. It could help them again with their premiums and their cost share because it would be a cut across the board. But the actual small businesses leaving or coming into the exchange,
Mhm.
the one thing about the association health plans is And because we talk about the level of funding has pulled like some good risk out of the exchange,
Yeah.
no doubt about it. But those businesses needed those choices, I would argue. The other thing though, if you have an association health plan, that may in fact take some bad risk with it, because now your association, any businesses in the exchange, I mean, in the association, you don't get to decide, oh, you could come in, you can't come in, you maybe can come on Tuesday. It's,
Yeah, it's everybody.
if you're in, you're in. So that means you're taking your good experience, and to the extent you were on the exchange, you're taking your good experience and your bad experience with you into this other pool. Again, the claims have to be paid one way or the other. Wherever you land, claims are gonna be an issue. So doing something that attacks the claims is most beneficial.
Yes. Okay, thank you. That's helpful. Yeah.
I really appreciated you highlighting all of the various efforts that we've been involved in the last couple of years around affordability with healthcare. That was helpful. One thing that wasn't mentioned is that we are in the middle of hospital transformation, which I think is, I mean, I'm optimistic that it will have really positive impacts on affordability in the healthcare world. And so I'm a little reluctant to want to make a drastic change in what we're doing currently when we might really reap the benefits of that work. And, you know, shifting to pools from the exchange just, but you know, timing's really important. I'm just not sure the timing is right.
Yeah, I don't think that if you're talking, I mean, certainly association health plans, but you're kind of studying that, thinking about that for 28. So maybe there's some time to see what that impact would be. If you're talking about reference-based pricing and either across the board or in a couple limited circumstances, then again, I think you're at, just like Act 55, the specialty drugs, you're pushing costs down for everybody. Now, do we all want hospitals to be able to be solid and sufficient and be there when we need to go to the hospital? Absolutely. I think Act 55 showed us. I know people are struggling. It's not an easy system for the hospitals to be operating in, but it was somewhat long overdue. And the only way to make things more affordable is to keep that pressure down. And then we have to make choices underneath that. There's a whole host of choices that have to be made. And I don't claim to be able to even identify all those decisions that have to be made, but there are the right people, the smart people doing that. But we do need to keep that pressure on.
Right. And I think hospital transformation goes beyond reference-based pricing, but, you know, really looking statewide at service lines or whatever.
Right.
So we just don't know.
Doing things differently,
Yeah.
a different center of, yes, all those.
I've been here in this seat since Fishka. But in that time, what we've really done, healthcare is very expensive in this country. We are a small pool. We've all went through, you know, single payer, and the bill came in and it died. Because the countries that have single payer pay 50% of their income, more or less, it's single payer plus others. But there is a cost, and it is higher than most Americans want to spend. And so we've been, it's kind of, you spend your whole time balancing the pain.
It's a damn if you do, damn if you don't.
Yeah, you got it. And now we're seeing people unable to afford the pain. This bill calls for having us set up so that if and when the feds allow association plans, that they to appear in Vermont, and we set the standards. But there's been testimony, we did it for years, merging and unmerging the individual and the small group, trying to balance the pain there. You're saying that if we do something Because yes, when we reduce the cost of those, I don't think if both Senator Gulick and I are on health and welfare, I don't think we realized how huge an impact that would have. I thank Blue Cross for having Courtney's predecessor come in with her graphs and show us how the wholesale price went down and the price charged went up. And that did. We're also running the balance of keeping our small rural hospitals afloat. Again, that's national. And so the advice right now is, rather than from you, is it is painful everywhere. And yes, I sit on the board of an organization that self-insures. It has fairly young employees. And yeah, the cost of insurance is hurting this. And so we, yeah, that's
Segment.
and it
Exciting.
yeah, a federal solution, which
Segment base.
I'm probably not going to risk to.
I'm not gonna hold my breath just yet on that one.
Yeah, I'm not holding mine. I'm starting to think maybe this committee should go back and look at pharmaceutical pricing. Because if you look at the online pharmacies from Canada, it is unbelievable the difference. And these are the same drugs that are being sold to my grandchildren in Canada. I don't worry that they're taking unsafe third world pharmaceuticals, right? They're all coming from the same place.
Well, that reminds me of, I believe there's another bill talking about the GLP-1s and potentially studying that as a mandate. Again, I've been part of the mandate conversations since way back. What's interesting about that one is in the mandate world, Senator Cummings, you know all too well, every time you bring just one up, it's like it doesn't seem like that much. It's 0.1%. It's like, but then they all start to add up. GLP-1s we know from the get-go are 5%. So when they first came into the market for weight loss alone, so if you have diabetes, if you have a cardiac condition, you need them covered, no questions asked. That's part of the treatment plan. But if you want GLP-1s for weight loss alone, we've kind of seen that pendulum switch. We started and Blue Cross had included them in their general plans, and then Cigna in plans didn't, but you could if you wanted to add them. If you were comparing like somebody that was with Blue Cross or is thinking about Blue Cross, we could level that playing field, an apples to apples comparison. Like, yes, let's include them and see what the difference is. Well, we know from those analyses that it's like 5%. And Blue Cross started with that in, and then we see that they've taken it out, Cigna's taken it out, and BP's taken them out. It's quite a hefty bill. Now the cost of those drugs are starting to come down a little bit, but there are also other ways and programs for individuals that need them for weight loss alone, can go to the manufacturer. There are different other programs that can help defray some of that cost, but including that in your insurance as a mandate is going in the wrong direction on affordability, I would
I was
suggest.
getting quoted health and welfare for saying, we have put all kinds of little grains of sand in those mandates. But eventually you create a beach,
Right.
and everyone, and now the feds are talking about making us pay for all the mandated medications. Which,
And this one's not a grain of sand. This one,
Yeah.
like, you got the sandcastle built and you're attaching that as opposed to just these little grains of sand that
yeah,
we all on any given time doesn't seem so bad at the time till you add them up, right?
yeah, it does. Okay, any questions? Kristen? Thank you.
Thank you. It's a pleasure to be here again. Appreciate your time.
Somehow when we did set up the Green Mountain Care Board, I had this vision of a whole bunch of Fishkill employees pushing their desks and chairs down. Okay, let's go to Emily Brown, who's still on 585.
Yes.
My name is Emily Brown. I'm the executive director at the Green Mountain Care Board. Prior to this role, I was the deputy commissioner of insurance at DFR. So I'm here to talk about 585 from the perspective of the Green Mountain Care Board. And so for those of you, many of you are probably aware the Green Mountain Care Board is responsible for regulating insurance premiums for the exchange. So that includes the small group market in the individual market. And with our review of those rates, we're charged with making sure those rates are affordable, also balancing solvency of the insurers who are offering coverage in that market. Currently, there's only 2 insurers, it's MVP and Blue Cross Blue Shield. So we have an interest in making sure that that market is not only sustainable, but affordable for Vermonters who purchase coverage through the exchange. So 585 has provisions that could in the future lead to an expansion of association health plans. I was in this committee and part of DFR when the first Trump administration had tried to expand association health plans. And there were decisions made at that time to try to limit the growth of association health plans. I think there was a provision put into law actually that prohibited new AHPs from forming if they weren't compliant with law that predated.
It could be in an association with somebody in California.
Yes, exactly.
They were somewhat bizarre and wild.
Yeah, and so going back to that point in time, this committee in the legislature made that decision because there was an interest in making sure that our small group market, our exchange, remained stable and that there wasn't essentially exodus of all the healthy lives away from the exchange into the association health plans. So I agree with the prior comments about needing to make sure that people have options. I also think that as the prior testimony mentioned, Vermont is a really small state. And one premise of insurance is that the greater the pool, the more stable it is, the greater ability there is to spread risk across that pool, which leads to, in many instances, stable premiums and then also lower premiums because you don't have people coming churn. It's called like people coming in the market when they maybe can't access a level funded or self-insured plan and then having to jump back into the exchange because at that point it doesn't make financial sense for them to be level funded or self-insured. So it's that dynamic that as far as the Green Mountain Care Board's interest in creating a stable small group market, we feel that there is adverse selection against the market when you create other options, and that the fewer people, the fewer healthier lives you have in that small group market, and the more you create these other options, especially in a small state like Vermont, the more instability that small group market experiences. And I just want to also raise the point that not all small groups can self-insure or go level funded. I again remember being in this committee and hearing from a municipality back in 2018 who was trying to get to a level funded plan and was not allowed to do that because their employees' morbidity, meaning the health of their employee pool, wasn't healthy enough or maybe not the right age to access that lower priced plan that often employers are driven to because of the lower cost of the self-insured level funded market. The exchange is guaranteed issue, meaning they have to accept all small groups, all individuals, no matter your health status. So if I know S190 was mentioned, that's a bill that is trying to stabilize and provide premium relief for the qualified health plan market. That's a proposal that's coming and supported by the Green Mountain Care Board. And we support that because if there is no exchange, there is no ability for an individual to go buy a plan right now from Blue Cross Blue Shield Vermont. That is actually not allowed. All individual plans right now have to be offered on the exchange. If we don't have an exchange, there's going to be an uninsured issue. It will either be the individuals who, again, can't go and buy, maybe they could buy an accident and sickness policy, essentially like a catastrophic plan, or a supplemental, they're called supplemental health insurance plans. Also, the small employer whose risk was not suitable for a level funded plan, if the exchange goes away, it's not like magically then they have an option to self-insure. So I think if we're thinking as a state about where we want to put, our energy, I think the Green Mountain Care Board's position is putting that towards a market which we regulate. We can guarantee the savings are going back to Vermonters because that's who's purchasing those plans. A lot of level funded and self-insured plans, while Blue Cross is a large player in that market. There are other out-of-state insurers who service, they're called TPAs, third-party administrators, who, like UHC is an example, Aetna, who offer their services for self-insured groups. But we don't regulate those premiums. So there's no way that we can say to UHC, well, we just gave you a discount off your premium, off the rate you pay for your hospital service. So you have to give that back to your policyholders or your group. So again, I wasn't planning on talking extensively about S-190, but it was brought up, and I just think that, again, policy decisions that can help stabilize the small group market are supported by the Green Mountain Care Board. I also want to address one comment that was made about the death spiral, about our small group being in the death spiral. I was looking at enrollment figures prior to my testimony, and I think the small group market started at 33,000 in 2014, and right now there's 32,000. So there's been a lot of fluctuation between then. There's been a lot of things that have happened at the state level and the federal level, which has impacted that enrollment over time. But I would like to push back a little bit on this idea that the small group market is in a death spiral and we have to create an alternative to fix that market. I think we need to stabilize that market. So those are my comments on the AHP section, and I'd also like to talk about site neutrality. But before I do so, I'll leave it to you to decide how you want me to structure that.
Here, Green Mountain Care Board's position is in this bill, it just sets us up so when the federal regulations are loosened and associations can come back in, that we shouldn't do that.
Correct.
Because that won't take them out of the exchange, which is where we do have some control over making sure premiums go back if they're up. Because when you form an association, you get enough people to go into the large group market, which is an ERISA market, and they don't have to abide by any of the state requirements that things be covered or not covered, that and so it doesn't, but anything we do that reduces healthcare costs, which isn't what this committee does, just some of us in the morning, that benefits across the board. If everybody is benefiting from the reduced cost of specialty drugs. And yes, we are now working on labs and imaging as the next area to get those costs down. But at the same time, always watching the financial stability of your hospitals. So, okay. This is starting to feel like 28.
I know.
Senator Hardy.
So I'm just scrolling through the bill, that section of the bill that deals with the associated health is a report back.
Yes,
It's not
exactly.
actually doing it. It's
Yes,
just a report.
I understand that, but then I think there are also changes to the statute that would be effective, is my understanding. I think it's section 4 is how and I'll defer to Jen Carvey, but that's how I read the bill. Jen, I don't know.
We'll have.
Oh,
What do
Yeah.
you mean changes?
So there's section 4, which is the amendment to the association health plans.
Okay.
Yeah. Is it section 3 as well?
This is one of those omnibus
With a
bills
bigger
that
effect.
bills have been.
Right, a delayed effective date for those changes, exactly.
Oh,
Yes, yeah,
Yeah, it was to prepare for these
yeah.
changes.
So yes, you're exactly correct. There is a study, but then there's also,
yes.
okay.
All right.
Okay. And so I'm happy to move on to site neutrality if there's no additional questions on my testimony on each piece. So, site neutrality, is in this bill that would create, essentially parallel or the same payments for, I believe it's outpatient physical therapy services that are at hospitals, and then with, independent or physical therapy services that are offered outside of hospital settings, so create a uniform rate. So generally, the board is supportive of the idea of site neutrality. I think where we get a little uncomfortable is that the board has rate setting authority right now for providers. So right now, we have the ability to do this. I'm sure you're also aware that we are starting to implement reference-based pricing writ large for the whole, for all hospitals. We are currently onboarding a contractor to do a lot of analysis about, what should our reference-based pricing plan look like? How is it going to impact hospitals? So there's a lot happening right now, not only with reference-based pricing, but also transformation. I think we heard earlier, there's a lot happening right now. And so I think why it's again, we don't oppose the idea of site neutrality, but essentially this is singling out one service line for site neutrality. And I think our earlier conversation talked about how in Vermont we tend to do one thing here, one thing here. And there's not any clarity here about whether this is going to add or take away costs to the system. So when we are engaging in our reference-based pricing work and starting to talk about provider rate setting, which we're planning to do, and we're required to do, I think we just want to caution that if you're starting to in statute set a reimbursement rate for one service, that then could create an inconsistency with how we are approaching other service lines. So there might be a reason to have physical therapists outside of hospitals paid more, right? Or primary care doctors paid more. It's going to depend on where we want those services to be offered. I think like I said, we already have the ability to do provider rate setting. So we feel like this is duplicative of our authority that was given to us. And that also is creating a carve out for one service line. So I think I'm coming to you with just a concern about creating a one-off for specific services, whereas we are trying to take a holistic system.
We're on another beach, but this is one
It's
great.
a different beach.
Different.
It's a lot smaller. And I want to recognize and I understand the pressures that our independent physical therapists are feeling.
They have had some pretty, well, in health and welfare, they've had some
Yeah.
very compelling tests.
Yes, 100%.
And I don't think we want to lose them
I agree.
either. So how soon might?
So one other thing I wanted to raise is that this applies to health insurers, meaning that it's only the health insurers in the market that the state regulates. So it's only the fully insured market, meaning this doesn't apply to ERISA plans. That's my understanding when I read the bill. So,
Well, we can't tell them.
Well, but the way the Green Mountain Care Board is approaching in our authority for provider rate setting is on the provider side, not on the insurer side.
Yeah.
So if we're talking about, again, this goes actually back to my testimony earlier about the QHP market, is there's an unknown financial impact here. I don't know if Blue Cross is going to try to lower the amount that they're reimbursing hospitals, or if everyone's gonna be now, then Blue Cross will be paying essentially all physical therapist hospital rates. I don't know the answer to that. It would
Well,
be
if they
really
do, then that will be a cost.
correct, and that cost will only be borne by the fully insured market, which is mostly our
Yeah.
qualified health plan market. So it's just to say, I'm again, I am supportive of our physical therapists, and I'm not trying to
Right.
detract from that. Like, there's a real issue here, but it just feels like, again, we're taking a little chunk and doing something, and there's
We're trying to help
ramifications.
some providers be able to survive,
Yeah,
but in the process, we could make more people unable to afford health insurance.
yeah. And again, I haven't seen a financial analysis, so I don't know what if Blue Cross or MVP have come up with estimates of the costs of
Yeah, we haven't
okay.
that either. Sandra, how do you-
Thank you, Madam Chair. I think, Emily, your point about how you're doing the reference-based pricing on the provider side and not the insurer side is so important. And I don't think I've heard it stated as clearly, because I'm not in the Health and Welfare Committee anymore, but that is the way that you can apply it across the
Right.
entire
You can
market
act- you can
instead
hit
of
the
just
rest of our-
on
Right. Yeah.
individual parts.
Yeah.
And so I think it's really important that we wait for that work to get done and not cherry pick things.
We are very tempted to cherry pick.
Yeah, and what is your timeline at this point?
So for reference-based pricing for hospitals, I don't wanna mislead anyone. We're focusing on hospitals first.
Mhm.
That work is going to be mostly implemented we're gonna start implementing that through our hospital budget process, not this summer, because guidance has already been set for that, but next summer.
Mhm.
So you'll start to see the impacts of our reference-based pricing plan next summer for the hospitals.
Mhm.
So I don't want to mislead and say, yeah, we're going to address physical therapists next year, and that's happening, and we don't have a plan for that yet. It was caution about like choosing a one-off approach,
Well, then
and then impacting one health insurance market.
there will be somebody else next year that.
Right.
And once we've set the precedent, we'll say yes.
Yeah, and I just want to say too, we did offer similar testimony when this bill was on the House side, but at that time it was different. The language was different. It was, I think, primary care providers, or it was a different language. So it's shifted a little bit. So just to clarify why we're coming in now
I
too.
think these are the two physical therapists and non-hospital
Not
affiliated
right,
primary care
right, exactly.
has
Yeah.
been here. The differential payment systems have. But again, you float all points up with you're in the middle. If the hospital staff. Which could cause bigger problems. Committee, any questions? So,
Sorry. Not the most positive testimony, but
no, there is no positive.
Yeah,
testimony,
yeah.
When you get to the cost of
Yeah.
healthcare. We've got 15 whole minutes before 7:05. Again, can you just refresh our memory and walk us through this in a couple of minutes? The wrong hand sales, we might not. Thanks, Fire. Sure, I sat there. Yeah.
Bill.
Good afternoon, Jen Kirby from the Office of Legislative Counsel. We are looking at H 585. Let myself speed along, but pulling out my section of my questions. So H 585 is an act relating to health insurance reforms. So you just want the high level overview of kind of what's in it.
Yeah,
Great.
2004.
So the first part is amending the health insurer governance and executive compensation provisions specifically around nonprofit hospital service corporations. And you heard Blue Cross Blue Shield is the only one of, so this language in particular adds two representatives of the public appointed by the governor to, the board of directors for nonprofit hospitals, service corporations, and specifies what they need to consider in their work on the board.
And I have been told there have been some all side discussions on this. On they have an agreement without getting involved, but this was the two. I'm still trying to get Ledge Counsel to come in and talk to us about the legal responsibilities of a board of directors. I'm concerned about the precedent. I'm also concerned about putting someone in with a, making it difficult for them to abide by the laws that we require from a board of director member. So, but if there's something else that's going to be proposed, I'm very open.
Then we have the provisions around executive compensation that requires hospital service corporations to provide certain information about the compensation paid to their executives, provide that to the commissioner of GFR.
Can't the director of DFR get that now?
I don't. Well, we're getting some nods from the side of the room, but I
I'm seeing
don't.
a lot of nods over here.
We have anyone actually currently employed by DFR in the room. Two former high level.
Yeah. I know they could put, I've been told they could put an overseer in anytime they want. I can't imagine they don't.
Did they file a 990?
Yes, yeah, here from.
Can you help us?
Courtney Harness, Blue Cross and Blue Shield of Vermont. Our executive compensation data is required to be publicly filed every year, Act 152, and available on our website.
I know we hear every year your percentage of overhead is in there.
So you
I'll
have to
let
hear
from
from DFR.
I'm gonna go through the bill, then we'll take testimony. But I've got another senator coming in and we're really tight, so.
All right, section 2 requires existing hospital service corporations to amend their bylaws by September 1st to comply with the requirements of the act. Sections 3, 4, and 5 deal with expanding access to association health plans, as was previewed in Emily Grubb's testimony and conversation with committee members. Sections 3 and 4 would amend the association health plan statutes effective July first, I think of, or January first of 2028. And then section 5 would, direct DFR to come back with a report in January on expanding access to association health plans, including the status of federal law, including whether we would be able to expand access as contemplated in those sections beginning on January 1st, 2028.
Anything say about impact on the exchange?
Analysis of the projected impacts on Vermont's health insurance markets of expanding access, including likely enrollments on effects on enrollment premiums for qualified health plans. That's the exchange and the individual and small group markets. So yes, exactly what we're looking at. And then also in consultation with the Green Mountain Care Board, the potential of expanding access to association health plans on the board's health insurance rate review responsibilities. They would have more plans to review. Then we have defining a sort of technical change, defining high dollar claims for claims edit purposes. We're replacing a reference to high dollar claims with claims that exceed $25,000 per episode of care. This is an existing provision from 2 years ago,
Okay,
but just clarifying.
what the way you moved to greater prior approval. There were also changes in decoding. I know one insurance company said if they had to, we had to make adjustments then. Is this a further adjustment?
I don't think so. I think this was something that was requested by the, well, it might have been, it might be requested by DFR. I'm not sure it was requested by the carriers, but I think we heard at least from the major carriers in the state that this is sort of consistent with their, how they were planning to implement anyway. All this provision says is nothing in this subsection about health plans not subjecting providers to prepayment, coding, validation, edit review. It says this particular piece says, but nothing about that prohibition should be construed to prohibit certain review of a specific provider under certain circumstances, including evaluating high dollar claims. So this is now naming what is meant by high dollar claims exceeding $25,000.
Puts a number on high dollar.
Sections 7 and 8 are the site neutral reimbursement for physical therapy, occupational therapy, and athletic training that would require plans to pay the same amount to providers for the same services in these areas across all outpatient settings. That's section 7, and express them as a percentage of the fair rate of the item of service. Section 8, ignore the underlining here.
This one I think we've done.
Yes, okay. So it requires updates. Section 9 on increasing flexibility in health insurance plan design directs Department of Vermont Health Access in consultation with DFR to look at the feasibility and potential impacts on premiums and plan design. Health insurers could offer plans in the exchange and in the large group market that don't include the current requirement for out-of-pocket limit on prescription drugs, as long as they also offer some that do. Section 10 is the annual reporting on healthcare sharing plans and arrangements. And I do check daily for the status of the
I think we've got that.
litigation
That
for
just lists out
That's
what
it.
they want.
Effective dates. Act takes effect on July 1st, 2026, except the expansions to the association health plans will take effect on January 1st of 28. And the site neutral reimbursement would take effect on October 1st, 26, and roll out over the course of the following, as provider contracts are entered into, amended, renewed, or otherwise effective on or after that date.
So just be clear. This bill, when it comes to association plans, it calls for studies. But it also says that association plans, I hope under some of the conditions we put in 2018, like you can't be part of a car buyers association in California.
I don't think I'd have to defer to others, but I think it loosens the restrictions
Well,
pretty significantly to
yeah,
the extent
I
that
think-
federal law allows associations to form.
if the federal law allows associations, there's a study. But this bill also says that association plans will be allowed here.
Yeah, so it
according to
expands,
federal law, yeah.
it expands the scope of association health plans. So I think it does allow for, it removes requirements like, that must have been organized for a purpose other than obtaining of insurance. When it strikes out a lot of the provisions we have in our law currently to expand access to association health plans. It starts in 2028, assuming the federal law has been modified to allow that. So you would get information back next year, you could make a change next year. Because it wouldn't be starting until 2028, although there may be some plan design happening next year.
Okay, and so
In
you've been
anticipation.
told we should let association plans move forward because they will provide relief to these small businesses which are hurting, and some of them are probably cutting back on or dropping their insurance. We've been trying to find help for the individuals who have lost some of their premium assistance, and some of them are seeing some huge upticks in cost. And all right. And if we're going to allow them, I suppose the question is under what conditions? But again, the Mount Care Board has said that if we allow them to form associations, which gets you into the large group market, is the reason they do that, where the state has no control. That, and then if that doesn't work and they come back, and the exchange market is in danger because we let them out. And when you switch, you can't go off and on Social Security or into, there's a readmittance charge because you haven't been paying your premiums. I mean, so how do you just switch back into the exchange? So those are questions we'll have to ask with this bill. I don't know what the committee wants to do with healthcare associations. I don't know if Bishka actually wants, not Bishka, DFR, all right. If DFR wants all that information, and that's just a huge amount to process, I'm concerned about their being able to say, but we report all our financials to, we're looked at by Department of Financial Regulation. On the other hand, as insurance premiums get unaffordable, you may find more people looking for more affordable. And if you have a $2,500 claim, you might have a good chance of getting it paid. If you have a $25,000 claim, you might have more difficulty. So, and how do you, people get through it and they'll take chances. So I don't know how we deal with that. Okay.
Can I ask a
Yeah.
question? If you alluded to this, Jen, but on page 11 of the draft, this is in the session that would go into effect in 2028, about association health plan. And it does actually, Madam Chair, like get rid of some of the narrowing on what an
Yes.
association health plan is. And I'm wondering, was there a reason? Do you know why the House did this?
This was the proposal from DFR.
Oh, DFR proposed this,
Okay.
because it seems to expand what could be considered an association.
Yes, I think that is
By a lot.
I think that is their proposal.
Yes, we had it very narrow. That's very interesting. Okay, we're going on to other subjects.
I'm trying to see right now. Senator.
I wanted to know this. Yeah, no, the morning committees are supposed to go off as a different time. Yeah, as far as I can figure out, we might get an hour a day if we're off the floor.
A little break on that. I'm gonna just run.
Okay.
I'm just gonna reach behind you.
I've not heard Senator Rob Hinsdale.
She had said they were going to be busy with the education bill. I just sent her a message to see if she'll be able to come over, but John Gray is also in that committee right now. He's not sure. if he can
Oh,
be-
no.
Let's
vote her stuff out.
Okay, here comes Senator. She is here. All right.
That vice.
And then we will take a break until we can get John. Oh, no. There's probably get John. And you 6:30 conference.
No, when you
And that's the correct supervisory.
yeah, it's John also.
Oh, yeah, okay.
Hi, Thomas texted me, which is really the way.
Well, we gave your time to Jen Carvey. But we can't get John Gray either because he's in your.
He's with us. Yeah. So are you giving me my time
So
back?
you're it. No,
Okay.
you're a different subject. But our next subject is 9:55. So
Well, I also have feelings about that. I think
Yes.
I want to know. But are we doing PCB?
you are here for 5:42.
Great. Are we live? Okay.
We are.
Okay, for the record, Senator Keisha Rum Hinsdale, former member of this committee, served on Senate Education. And that is why I'm for you today on page 542. PCB testing and remediation. I don't know that anyone is a stranger to this conversation that is ongoing in the state and in the building. And I will say that Senate Education, I believe, tried to find a middle path that didn't involve completely ending the program because there is no money in the fund, and recognizing that this is not a year where we are going to replenish the fund. So what the House version of the bill did was end the PCB testing program in school. Now, the thing that I think is that our committee found concerning about that and why we voted unanimously for this alternative proposal is multifold. One, some schools, are just completing their testing. It in some ways put the state on the hook to help them, with their testing, with their program, and with their remediation. And I think the undesirable outcome that the House was trying to avoid is that you could learn you have unhealthy levels of PCBs in your air in particular spots on your campus, and you could have to move kids or teachers or whomever out of that part of the school indefinitely until remediation occurs. And we took lots of testimony from ANR, AOE, and the districts involved to hear about all of the pros and cons of that, unfortunate scenario of having some of the schools tested have really high levels of PCBs that needed to be remediated. I will tell you as a mom that I think now the toothpaste is out of the tube. Most school districts are going to need to do that testing, or going to be asked to do that testing, regardless of whether or not the state is involved. if the state has no involvement, we have no requirement to support them in the future if they do find high levels of PCBs. And in that regard, with a current lawsuit, I think it's against Monsanto. I can't remember who's responsible for all these PCBs. So with a lawsuit in play around this, the only reimbursements that will be made if we win the lawsuit or if it settles will be based on costs incurred. And it is much easier for AOE and ANR to aggregate all of those costs, get the money and distribute it to the school districts than it is for each of the school districts to then have to become a party to the lawsuit to get their costs covered. So I would propose in the future that we look for a way that so the bill proposes that we extend the deadline without new resources, but I would just say what I said in our committee, which is hopefully we can work with appropriations to come up with the approximately $10 million over the next 4 years, let's say, so $2.5 million a year, to do the testing for schools by the deadline. And then we can make a much more informed decision as this lawsuit is carrying forward. And as we look at facilities conversations that should be happening at the same time, where we want to know before we get too far down a path, wow, we're not going to use that middle school, but that middle school is now going to be offline. That we, the state, help come up with the money to do the testing and not let individual districts have to make a very scary decision about are they going to test or are they not going to test.
I mean, my concern, and I've been concerned for years, we haven't tested schools for radon.
Yeah.
You can't sell a house without a radon test.
Mm-hmm.
We know the potential is there.
That's something.
If you do, that's not wise. Maybe you don't have to grant it. But we know the potential is there. We know the probability is there.
Yes.
To just say, sorry, we don't have the money to check and fix it. I don't think as a state, I want to go to court.
Yes.
When some child gets sick and say, well, we didn't have the money.
Right. And ANR probably told you.
No,
There
we
are-
had A&R.
Oh, okay. Well, there are different concentrations depending on age. So there are
that
school
I
districts-
have heard.
Yes,
It wasn't
and-
this year.
kind of to confirm your point, there are school districts that have said, okay, we got to put only faculty in this space, or high schoolers have to move here and elementary schoolers have to move here because they're different acceptable levels based on your growth level. And we just don't want our elementary. I mean, I didn't want the deadline to be pushed out so far that a whole generation more of elementary school kids could be exposed without any knowledge.
Thank you, Madam Chair. Can you clarify a comment you made, because I didn't understand it? You said that the schools are gonna have to test regardless of the state. Why do the schools have to test regardless of the state?
Well, I think gets to the heart of the matter is they will not be required by state law to test if we end the program, but they will
Who's gonna
be
require them to test?
Parents.
they will be part of the group of school districts that were in line to be tested. And then we ran out of money. So if anyone in that community felt that, okay, we were in this line, now there's no money, so you're telling us you're just ending the testing program. I don't think that answer is going to be accepted in a lot of our school communities.
I also asked the question of A&R.
Mhm.
And I didn't think the answer was sufficient. There is a list, and there are the most dangerous, the most problematic schools, and then there's like a middle grade, and then there's like a low level of possibility,
Of
of
the
probabilities that
approximately
they've got, yeah.
Yeah.
And they didn't really, I want to know which schools have been tested and which ones haven't, because the idea was to do the ones that had the most potential for toxins to be tested first. And what I heard was, well, we haven't really quite followed that. So do you guys have a list? I'd love.
I mean, that's just, I thought the testimony on what's been tested and what information they do have and don't have was clear in our committee, so I can't
Yeah.
speak for
It wasn't
A&R,
clear.
I thought they were in here.
Okay, we haven't had them in here, so.
you
Well,
might.
maybe it wasn't, maybe it was, Matt Chapman was here.
Oh,
Yes,
yeah.
and then Martine Aston.
Did he do his PowerPoint?
No.
Because it
problem.
has all of the, so from what I recall, and I could use ballpark numbers, you know, that, let's say something like, 300 schools were built before 1980. And so they qualify for testing, period. About 138 schools of that have been tested and they have found varying levels of PCE.
And I remember those numbers.
And the
Yeah.
levels vary day to day, whether the windows are open or fans are running or.
So
That's the problem.
that is, yeah, and we talked to a district where they said we've like done hoops and jumps and the problem is still there. But
Worse than it was before.
it's worse than it was before, but that's really good information for people to have, right? I mean, you still might not want elementary schools in a facility at all that you can't get rid of the PCB levels. You may decide if you have a consolidation conversation, we're not even going to turn this into a community center. We are going to eventually be asking for demolition dollars, and those demolition dollars could be included in the lawsuit against Monsanto. Anything we don't do under the state umbrella, we'll have a very hard time getting reimbursed for. And I think there will be large groups of people in the state who thought their school was on the list to be tested that will want that information.
I think it's a great theory. I think it's a great idea. We don't have the money to back it up, sadly. And there are some really rural schools that if they get tested and their numbers are over our limit, the limit set by the state of Vermont, there's no other school for those kids to go to. And it's so, I like.
Or in
the
Burlington,
intent.
where they went and learned in a mall, right? I mean,
Luckily, we have them all available.
Yeah.
So it's great intentions here, but it's been so problematic in so many ways.
and this might be where we disagree, but our committee came out unanimous with the proposal because,
I know, I was in the committee when,
and at least I, as someone who's passionate about school construction and regionalized high schools and things like that, I think this is part of the tail that wags the dog to say some of our buildings are too old and they're too full of PCBs to be part of the conversation about what school facilities are in use in the future.
and just to be clear, when you do any kind of renovation, that testing gets done first.
And to me, it's an environmental justice issue. If it's the districts that can afford to do facilities planning, that go first. And if they're all on their own, then it's gonna be the wealthier districts who do the
But
testing.
what happens if a poor district tests and their numbers are high, and then what?
Then, I mean, so if we weren't involved, then they have to figure that out on their own.
Right.
If we are involved,
We don't
then they have a
have
better chance of recouping the cost and working with experts in the state. That's the problem.
The thing that's changed is that for better or for worse, we now know that schools built before 1980 or between 60 something and 80, which is when the bulk of the schools were built
Right.
to take care of the baby boom kids.
Right,
And so we have a whole lot of those schools.
right.
We know there are chemicals that can cause cancer in children.
They
Or
generally do.
Or,
Yeah, they're a percentage of it.
and it's may take years.
Right.
There was a news story about a building on a college campus in one of the Carolinas
Mhm.
that has had 22 former students whose major had them in that building that have all come down with strange and rare cancers in their
Mhm.
late 30s.
Yeah, we have
40s.
a high level of cancer clusters in Vermont.
Yes,
Uh,
so we know.
Right.
That to me says we have some liability
I
there.
agree.
And to just say, well, we don't have the money, so we're not testing your kids because it might cost money to have to fix it.
I think if instead we say you're on your own with all of that, I think that's the question. If some people want to say you're on your own, if you test and find that out, I don't want to do that. And our committee did not want to do that. And AOE doesn't want to do that, and ANR doesn't.
But it should also be part of the decision you're looking at if you're going to do consolidation. What school? There's might be supposedly in school, but you're going to have an expense. Okay, we're gonna have to go on. This is not difficult.
Well, can I ask just a question?
Yeah.
I don't know if did you guys get testimony from the AG's office when you were doing this bill? Because one of the things I think you alluded
Yes.
to it.
And the Department of Health.
Yeah, and most specifically the AG's, because you alluded to the state involvement to be
In the lawsuit.
and helpful or important in the lawsuit. And so I would be interested in hearing that testimony in here.
Mhm.
Be like, what is the connection between the state's involvement and the potential viability of the lawsuit? That's.
I may have said that before you came in.
I heard you say it, I think, as a walk.
Oh, okay.
So, and then the second thing is, there is
Can I answer that question a little bit before you? So you can only recoup an expended cost. So if
We don't expend any cost, we can't get it. We don't have a
Right.
chance to get it.
okay,
and you would then have the district have to be on their own to recoup any costs in that.
And if the
lawsuit. They
district
wouldn't
is
be able
on
to go to
their
the
own-
AG.
if we were to get rid of this. Sorry, it can't even my mouth at the wrong time, but if we were to get rid of the program. When the districts decide, a district decides on its own to do the testing,
They're not part of our lawsuit.
they're not part of the state lawsuit, but they could potentially have.
They
their
could
own.
try to
And
become
then
a
you're
party.
gonna have
That
to
would be-
hire a lawyer and
Right,
sue Monsanto.
Second- I know we're gonna talk about school construction and there is a way to. Integrate this whole concept into the school construction, as part of that program.
Mhm.
So that it's not this sort of standalone thing, but is more integrated into what we're gonna do potentially with school.
And we tried to work on that and we don't disagree. I just wouldn't want to. The big question is whether you end the program this
Mhm.
year or you extend the deadline. And I do believe the testing should happen. And we should find the $10 million at the state to do the testing over the
And if
next
we
4
do
years.
nothing, the deadline stays where it is. So, I mean, there is a deadline.
Mhm.
Schools have to meet it. If we don't have the money, then the schools have to come up with the money.
But then they're not, even if they paid for it themselves, expecting the state might reimburse them, if we end the deadline, they're no longer part of our program.
So that's what we need to do. Senator Brock, and then I'm gonna move us on, because we have John and we're going to move. Well, we have
Nice.
John.
Well, maybe he brought money with him. You say maybe he brought money with him, so he might want to.
We need 10 million, John.
You want $10 million?
Yeah.
Just a question, if you could, perhaps you could refresh my memory. It seems to me that there was some controversy regarding, say, the Burlington High School issue,
Mhm.
regarding the levels of PCBs and so on that were there, and whether or not the levels that were there at the time were tested were actually sufficient to demand the renovations or replacement that actually happened. Is this a fixed thing now that we know what we're looking for and we know how much of what we're looking for?
I would give two generalized answers to those questions, and then you probably would want to ask ANR and AOE.
Yeah.
I think ANR and AOE would say they learned a lot from that situation. You know, that was, and I'm sure Senator Gulick has thoughts on this, but everybody was like, well, we're moving to Macy's, you know? And then sort of in the aftermath, it was, how do we do this better? They did have extremely high levels of PCBs in certain parts of the campus that were not considered safe by both state and federal standards. The second part of my answer to all of this that I asked natural resources, like, do you want to get involved? Is there's a question about the standard that the federal government has for PCB levels and the state has. And ours is an air test and theirs is like the core of a building. And I think, I mean, like, I felt convinced that we could be using an air test, and a lot of the remediation that's been done in high PCB level schools is fans and HVAC systems and things that are not tearing the whole building down. But you really want to know if you're breathing in this carcinogenic matter, not is it in the core of a building. So that is where I don't know that we ever got satisfied that you could do apples to apples with those two, but many of our schools are at levels above what the federal government or the state believes are safe.
Do we have any evidence of harm?
That would take some years. And and this happens with all of our environmental toxins.
Mhm.
When we have a cancer cluster, it might be the Superfund site, it might be the asbestos mine, it might be your school.
Has it been schools is really what I'm trying to get at.
Well,
Do we have any evidence, for example, of harm?
Yeah.
I guess what I would say is we didn't ask. Department of Health would say there is significant harm, and test after test of exposure to high levels of PCB shows almost, universal harm. And especially if you're more vulnerable. So if you get exposed to them when you're 5 instead of when you're 17, that also makes a huge difference. So did we ask the superintendents, like, have you talked to, the kids who are in this elementary school? No, I think we did hear from Senator Campion, right? And so we did hear about what PCB exposure or PFAS exposure, what these carcinogens and things you can absorb into your bloodstream, that we have parts of the state where there are pretty high cancer clusters that have nothing to do with burn pits or your veteran status, et cetera, but, seem like a cluster of people that because of their geography have a higher risk of harm.
Okay, we're gonna have to go on. And we will have to figure out what to do next.
We'd love to see the bill right now.
We've got a few we have to knock out here. And then I'm hoping the next one is one that's really one we can knock out, John. It says something about fees.
You want to do the 635?
Yeah.
All right.
Oh, that's right. We had you in here for 9:50.
No, but I actually think that's great if you're agnostic as to ordering. Scott is already here and that was.
Scott's here and. Yeah, I think I'd like to get 6:35 to release Scott. And then, because 9:55 is not coming out of here today.
No. That's not what I. We can vote. Chris.
But we have a couple other ones, 5:67 and 7:53, which I wouldn't mind getting out of here today. So let's see what this one is. Let's do this one.
Okay. So John Gray, Office of Legislative Counsel, I am joining the Zoom now. This one will be pretty simple, so I think you will be pleased. If you like simplicity. So this is while I'm pulling it up, this is a bill that relates to, it's really simple. It does one thing and it says it 5 different ways, basically. It's a bill. Currently, the Commissioner of Correction has the authority to impose supervisory fees on folks under certain sentencings, basically parole, work release, that sort of thing. And they have authority to impose up to $30. As I hear, the existing practice
The
is
fee is from
the
inmate,
exactly.
whatever the
Exactly.
term is.
So, and the testimony, before I show you the language, the testimony is basically that the costs, and I think that Scott will speak to this as well, it actually costs more essentially to collect the fees than you gain from the fees themselves. So sort of that's what I had to say
Doing
about
it in
that.
principle, but it costs us money, okay.
And of course, some folks, have opposition to the principle as well, that you should pay for your own supervision. So 635, that really is what it does, but I will walk through the language so you can see all pieces.
And this came from
With the supervision of your children.
So, this came through institutions before.
This, our institutions committee.
Yes.
Okay.
Well, so it originated on the House side. Yes.
Outside in, I assume,
House corrections and
House
institutions.
corrections.
Exactly.
Yeah.
I think this was initially from Representative Hedrick, if I recall correctly.
All right.
But yes. So H635, I'm gonna skip past this language. I'm gonna kind of come back to it because it's really informing change. Page 2, this is the core provision. In Title 28, this is the existing authority for the Commissioner of Corrections to impose that supervisory fee. I can read through it as if it was not struck through, can collect a fee and then it's
$30 a month.
$30 a month. It's for those under supervision of the department who are on probation, furlough, pre-approved furlough, supervised community sentence, or parole.
Okay, so you're out and you have to report to a probation
Exactly.
officer, and this is either supposed to offset the cost or make you have some financial buy-in to the program.
I think that's fair.
And when did we set $30 fee?
This was a long, long time ago.
Like the 1800s.
Not
I can't believe we still do this.
do you have those?
I said the $30 did not, bought a lot more 10 years ago.
Pre-90s? It's pre-90s. Yeah.
Or definitely bought
Adjust
a
it for
whole lot more in the 1980s.
So,
Okay.
yeah, I do want to call it the next language just to reassure you that this doesn't have some knock-on effect that you might not like. So here you see supervisory fees collected by the department shall be credited to a special supervision and victim restitution fund. The thing I wanted to call it is this does not affect the victim restitution. There's a separate fund into which victim restitution funds go. So this doesn't disrupt anything related to that. It's truly just for costs
If
of
that was
supervision.
set before the 80s, there wasn't a victim's restitution.
Yeah, and I think that this call out isn't even to the specific fund that
It's
you guys
a-
might regularly talk about, and I almost view it as a reference to something more general. It's a fund into which you can deposit both rather than exclusively one. So just wanted to note that this does not have an effect on victim restitution. And then you see the authority to adopt rules related to the supervisory fees. So this is the core provision. It strikes that authority, even though the commissioner would no longer have it. I'll scroll back up. Here you see that the commissioner is also charged with this general authority, which is not specific to supervisory fees, but includes supervisory fees. So to enter into contracts with private collections agencies for the collection of supervisory fees and fines, penalties, and restitutions. If you remove the authority to impose the supervisory fees, you no longer need the authority to contracts to collect it. I additionally would note that the testimony we heard from DOC was the full rulemaking they had undertaken for supervisory fees was a rule on using private collections agencies. And we talked about a little bit too. This is really all you need to know, but I'll keep talking anyway. Section 2 is just to be incredibly clear. So you've removed the authority, therefore,
I hope so. I'm hoping to have 2 or 3 of you, including this one.
yeah, you'll get this one out.
This point.
You've now removed the authority from the commissioner to impose these, but in case you didn't know, under sub A, you now prohibit them from imposing the thing they no longer have the authority to do. So that's what A does. It says DOC shall not assess, bill, or collect any supervisory fee, either directly or indirectly, is basically what it's saying. In any case, you've removed the authority.
Okay, so there is just no more fee.
No more supervisory fee.
Okay.
You can't do something like this. But B, C, and D address some separate questions. So you might ask, well, what about ongoing efforts? What if you're currently engaged in the collections process? What if you already have the fees, they haven't been credited, something like that? So B says, DOC shall forgive all outstanding supervisory fees, and they use a web portal they can use a web portal to collect some of these payments. So eliminate all references to the outstanding fees in their records in that web portal. Under C, DOC should cease all efforts to collect those fees, including through, and then it specifies some of the common ways that they might: wage garnishment, tax set-off debt collection. And DOC is also required to coordinate with any agency made party to supervisory fee collection to cease collection. You might naturally expect these things to happen. The language makes it clear. And then D speaks to something that does not happen, but says that it can't happen. So on page 3, notwithstanding any law, failure to pay the fee shall not constitute a violation of any of those conditions, right?
Okay.
But we heard testimony from the department that they don't do this, but this is just saying,
In case somebody thinks about it.
um,
How do you feel about this comment?
This is definitely.
they do collect the fee, and I think that
the fee right now.
they collect the fee, but there's no real mechanism, I think, to incentivize. If you don't choose to pay, I don't think they have strong mechanisms to enforce it. And I think that Scott may speak to this. There's a large backlog of uncollected fees that take back a long ways. Section 3 is yet another similar section. It is talking about rulemaking authorities. So as you know, when you adopt rules under the authority of a particular law, if the underlying law that extends the authority is repealed, then by operation of law, the rule that was predicated on that law goes away. And this is just being clear that that's the case. It says, DOC, identify each rule adopted under the statutory authority that you've now repealed. And this is a thing that you're meant to do, but it's nice to have the direction. For each, the commissioner shall notify the Secretary of State of its repeal by operation of law. Again, if you didn't have this section, it still happen. And then B says, review your rules, policies, and procedures, remove any references to this now non-existent thing.
Okay, where did this go through a Senate committee?
This
Or did it come to us?
it went through institutions,
But they didn't make any changes.
didn't make any changes.
Did
This
the
was
House committee just have a really long time to upset?
I'm thinking this committee had a lot of free time,
A lot of time. It's like repeated 3 times.
just in case you didn't understand, no.
There's benefits to clarity.
What it doesn't say is if somebody's paid these in, they don't have any responsibility. The department
Sure.
doesn't have to pay them back, right?
Right, and so that also speaks to why initially this was proposed to take effect this summer. And it was
Okay.
pushed back a year to give the department time to figure out
How to do it.
Trash can.
Yeah, it's like on
That
our
is the bill.
side. Keep it on your side.
So really simple concept here, and it's in the title. If you just read the title, you would know.
Nice work, John.
It's
Thank
just constantly ending up over here. Thank you,
All right, but
Usually the complaint is there aren't enough trash cans.
Scott just constantly is kicking it over to Chris and me, and then we end up with this like piled up of trash. Sorry, John.
No, would you like me to turn it over to Scott Moore?
Probably, yes. Thank you, Scott, if you dare.
Madam Chair, I can assure you,
Only Wednesday, it's not.
I can assure you, I did not kick any trash.
Thank you.
Thank you.
And I don't think we kicked any at you, so we're all.
Yeah, we'll see how it goes. For the record, Scott Moore, Grand Peaceful Office. Let me just share my screen. I can show you the fiscal notes. And Madam Chair, I believe John was sharing when the trash can was being passed, so the YouTube world probably did this.
It probably isn't on YouTube forever.
Not that I can, yeah. So just here again, the bill summary would, as with John just spoke to, this bill would remove the advisory fees. A couple of notes, the background of this, Department of Corrections has the authority to charge up to $30. Their practice has been $15 per month for a justice involved individual. With the exception that there are some individuals who are enrolled in Reach Up, Social Security Disability, and the Vermont Age Blind Disabled Program. They will not have to pay this. Individuals accepted by another state under the Interstate Compact, individuals residing in a residential treatment facility or housed in a correctional facility, and individuals on parole for life with approved exemption request. So those would not have to be subject to this particular supervisory fee.
Yeah.
So what that looks like for collections, you were talking about public earlier, there's an electronic payment portal where they can go online and pay with a debit card and credit card. That does have fees associated with it. Those fees are paid for by the Department of Corrections, so those are not passed along to the individual. There's also a lockbox option. That lockbox allows them to use a dedicated post office box monitored and run through the T-Bank, where they can go and give a check to that post office box. That does have monthly fees for the post office box as well as some transactional fees. And then finally, there's a tax setup program wherein
Annually, the Department of Corrections would submit a list of accounts that are 90 days old or older. And they would then try to potentially garnish some wages as it were.
So there are fees on the fees. If somebody pays using the lockbox, they have to pay the fee plus the
The
fee.
individual would not, the Department of Corrections would.
Oh,
So the Department of Corrections is paying a lot of money
to collect
to
fees that
collect
are-
a little bit of money.
You
Yeah.
can see this chart here.
And this doesn't talk about the personnel time it takes.
Correct. So we can see that the revenue of the past couple of years. Roughly $300,000, FY 25, FY 24. The operating costs are the cost for the e-portal, for the lockbox program. And then therefore your net revenue, FY 25, $283,000. So that revenue would not exist anymore. That's one thing to
Okay.
note.
And it's going into a special fund.
Correct. Yep.
So this doesn't impact the budget that we just had.
No. Section 2 of the bill does talk about forgiving outstanding collections that are out there. You will note that above 120 days is roughly $3.3 million. For a grand total currently, as of last month, $3.5 million in outstanding supervisory fees, which goes to show the lack of enforcement really, that they can't, there's not, they can really effectively collect this money. And one thing I would point out, the Department of Corrections did mention that although this chart does show 120 plus days, most of this debt is years and years and years old. So it's not just like suddenly,
They don't just write it off after a year or two.
it's oftentimes you look at bad debt banks, 6 months or a year older, some of the stuff is just from really limited. So,
We
but
are never going to collect.
Does,
most likely,
it does look like that we don't collect about half, maybe a little more. Does that operating cost include chasing around the accounts receivable?
it does not necessarily include, that's correct, this is just the cost of the fees and everything else. Now, Department of Corrections did share, which is not my fiscal note, but I'll just share that with you, some testimony that they had, which is one second, let me just pull it up. I can show you what they had.
But the interesting thing about those numbers is between the 60 and the 120, it went like from 50-some thousand dollars to 3 million.
Yep.
Normally, you'd expect it to go down if you were trying to collect it.
So it shows just how old it's been sitting.
Yeah, and the odds that you're gonna collect anything are pretty minimal.
So Senator Madison, your question here, this is the overall cost versus revenue snapshot provided by Department of Corrections. What they're showing, if you look at that FY 25, they collected $303,000 in these fees with staff and effort time. They're suggesting about, I think overall like 5% of their time might be spent on this. That cost trended about 560,000. So 560 to get to 300, you're having an operating loss of 256 per year. So it effectively costs more. If you think about it this way, I don't have the exact numbers, so don't quote me, but I remember from testimony, the Department of Corrections said there's 4,000, 5,000 justice involved individuals on parole right now.
Yeah.
If it takes 5 minutes for 4,000 people just to go and check once a month, that's $300 a month, roughly, something like that. People's time to go out and say, don't forget this month you gotta pay your fee.
Yeah.
Don't forget this month you gotta pay your fee. So there is a substantial cost to the operations of the department to be able to collect these fees.
Gas mileage isn't going down, really.
Not to mention that
Nah.
this is
Okay, so it's costing us money
justice.
that at best, if you are a person that is really trying to get back on your feet. You're on parole. You've got a family. You're trying to get a job and you are trying to stay clean and pay your debts. This is just pushing you where and setting you up to fail. And it's costing us money to do that. And the people that aren't going to pay it aren't going to pay it.
Correct.
And $30 in the 1970s, you know, this were then in those times, the 80s. That was a significant amount of money. You made $35,000. I mean, when I moved here, teachers in Montpelier were making $18,000 a year. When I got out of school in Boston, it was $7,000 to $8,000. So that was the last boiler farm. Yeah, that was real money. But it's not anymore.
And this,
So
the
why
Department of Corrections did have a graph here, shared with you. This is their graph showing the amount of money collected versus staff money spent to collect. So. Now that is Department of Corrections numbers. One thing they did mention as well is wage garnishment often might go for child support versus, you know, that's. You know,
Yeah, we would probably want it to go to child support first. Okay,
That's all.
correction says get rid of it.
The Department of Corrections testified that this would in fact be, less revenue for them, so at this point, they are not necessarily in favor of the bill. It would be pushed out a year, so it wouldn't have an impact on FY 27 budget, it wouldn't start FY 28. But because of that, they haven't looked at how to replace that
But they wouldn't
revenue.
have the expense, because they'd still have the personnel, they'd just be doing
So they're doing other
something else.
things that would be,
Okay,
I don't want to say more worthwhile, because I don't want to.
Or they might not generate revenue.
But then give them more time to spend with each.
You could come up with another way. You could do bake sales.
Pretty big things.
So Chester, somebody can do
Yeah.
something.
okay,
That's
we
all?
should have taken a picture
Oh,
showing
pretty good.
Ryan's using Montpelier jail cell as a dressing room.
Wow. I didn't.
She got a kick out of that.
What?
Joe Baez came to Montpelier City Hall and they had turned our one unused jail cell into a dressing room in City Hall. She did get a kick out of that. I'm saying if we had a picture, we could have sold autographed pictures of that.
She's
But-
thinking.
Yeah. Okay, I'm gonna give you a few minutes to ruminate, but I'm probably. I don't know.
Let's vote.
This came out. If you were ready to vote,
I move H 635. We concur with the proposed house. As passed by the house.
okay, and said was by institution.
Yeah, because institutions didn't make any change. Did they add a section to repeat the others?
Okay. Senator Hardy has moved that we approve H 635 as passed by the House and sent to also passed by Senate institutions. Is there any further discussion? Are there any amendments? Okay. Hearing nothing, I'm gonna say all those in favor say aye. Opposed say no. Not always enthusiastic, but I'm hearing that as 7-0-0. And who would like to make that
Do you want me, you're looking at me?
I'll report it.
Yeah.
Then you're back to order. All right.
If there's a direct-
Yeah.
Yeah,
All
there you go.
right.
Just like the rest.
Thank you. Okay, we've got till 4 o'clock. Before we're gonna vote out more. You wanna talk to us about school construction? Is that,
Dan, I don't know what you guys want to hear, but I'm happy to come up.
I don't,
We didn't have a chance to. I'm fine, so I was talking about distract because we were on. the
No.
floor.
and you have, oh, is that what John's here to talk? to us
No,
about?
I mean, not on this, I wanted to show it to you first.
Okay,
I'm gonna try to be two places at once this afternoon. I'm gonna go on Zoom. That's all.
okay. Well, let's still have four bodies in this room.
Cheers.
All right, cheers. We are still trying to get through this bill, so when it comes to us on Tuesday, we will be ready to vote it out on Wednesday. Told them that chance, but maybe we'll get there. There isn't everything in there that has to do with revenue taxes is contingent on everything else happening. And I have a feeling that as the contingencies come, go, and get changed, that then we will need to be making adjustments. But this is really fleshing out things that were in 73. And John, I don't know, there's a couple sections, school construction is one. Can we just, well, we know this is going to go to bonding and, but, so that's one. The other one is, and probably one we want to look at, we've looked at the mechanism for setting a second homes tax, but that money is in this bill being targeted to covering the cost of the homestead, some homestead, whatever we end up with, tax abatement, rather than putting the cost of that abatement back into the overall cost of the system and raising everyone's tax rates to offset the cost of some people paying less. Senator Mahovsky, who we need to get in at some point, but tomorrow she's coming in, but if it is the same, and I think it's very similar to the bill she sent us earlier this year, is going to propose that second homes tax go in sooner. And that the money goes to school construction, which would have an impact on our ability to actually lower everybody's property tax rates if we don't include the cost of buying down some people's rates in the overall fund, but raise revenue outside. Then it's going to lower rates.
But yeah, isn't currently all the money that we're spending on school construction, whether it's through debt, repayment or deferred maintenance, I mean, that goes to the bottom line of the ed fund, and so.
Well, it's not being debt, yes, debt.
Your education spend.
That's what I mean, so it does affect our property taxes. So
Right.
it can-
Yeah, but we're moving. I mean, if we use this revenue to do something other than buy down the tax rates, and I will have to ask Julia if we can figure out, we did, how much. So Senator Beck, you had numbers last year where we figured the cost of the buy down, the sensitivity buy down, and what it if we weren't buying those down,
Oh, yeah,
people would be paying less
Yeah.
because that money wouldn't be coming out of
right.
it would be being added to the overall money that
Yeah,
needs to be
it's-
raised.
I
And they
remember
need you behind
The
it.
exact percentage, but it's a, yeah, a significant percentage of people that get the credit would be better off if we didn't even have a.
If we
credit
didn't have a
system.
credit.
Yeah.
And that's the problem
Yeah.
that you
That's
need
true.
to sign that.
I have it on.
Okay.
That's the problem that the House in Act 73 were solving with the second homes pact. And we won't know until we know how many second homes there are. There are some estimates, but I think it's like 2 to 1 that we. Based on some very preliminary numbers that the tax department pulled, but we won't know actually what's out there, until they finish updating all the grant lists, which will be a year from now. So that's where we are. And we're theorizing. So John, what do you have?
I don't, today has gone in a strange way.
Okay, what would you like to talk to us?
So I can really only speak to the school construction section
Okay.
of the bill. I do know Kirby is watching, if you want to talk about
He may
other
appear in
things.
the doorway too.
Right, but to the extent that you want to talk school construction, I can do that. And there's different ways. Obviously, we've gone over the language a couple of times. I don't know if folks have reactions to those things, if they just want me to pull it up. There's also proposals,
So
but they,
they're right now, as I'm remembering, this proposal is that schools would bond
and the state, yep,
and the state. It would go through the municipal bond bank.
the.
Or some of it would go,
Yeah, you're recalling the discussions around the Rhode Island model.
yes,
So that is the portion of the program that is through the debt service subsidy. And the idea there is to have folks bond locally. That would be done through the bond bank,
right,
protect the credit rating of the state, but separately, the House added, that's what was contained in Act 73. Separately, the House added these state bonding support provisions, which could, we don't know, but they could impact the state. And so tied to that determination is a request for the treasurer's office in consultation with CDAG to get a recommendation on what kind of state bonding support can be provided
okay.
without hurting the.
So we're still looking at the Rhode Island model with the potential that we could also do some bonding at the
Exactly.
state level.
That's right.
Okay. All right. And Senator Hart, something,
I have, I've been working, as you know,
Yeah.
working on this section with John and others to try to clean up some of the questions that came over with the draft, like the things that didn't work, but also to make some other changes based on our discussions and what I've been hearing. But I wanted to
talk to me.
talk to you first about it.
I'm running
and then
out of time.
we were on the floor, so, I mean, and there's still work to be done, like, I've gone through it, but I'm trying to help make things a little smoother by trying to work through some of the problems. I have it, but
Okay.
it's up to you, Madam
No,
Chair.
I mean, if
I don't want to.
If you don't feel
surprise-
ready to share at this point,
I could be
that's
ready
fine.
by tomorrow as long as you and I and John and get a chance to talk about it, and that's the
that
problem.
might,
But
yeah, I mean, finding time, we've been on the floor until we start committee.
right. But-
Tomorrow I'm starting at 7:45. This is getting crazy.
I mean, we can go through it as long as everybody understands it's a draft and it's just
right.
the,
Yeah,
trying to.
just a thought. So you
Yeah, I
get
mean,
the feedback here, which might help.
If you're open to that.
Yeah.
Okay.
Because we
I mean,
looked at the
if we have
language.
time, you have it, John.
A couple-
Do you want me to pull it up?
Sure, and I will say there are some things in here that are not.
This is not ready for prime time.
Exactly, although it's gonna be live on YouTube,
So
so.
this is, this is theoretical. This is
But, yeah,
throwing something out there for our thought process.
And I
That's
can-
helpful.
okay,
Can you, would you mind before you get into the exact language, what you're trying to do? I know there
Yeah.
are like some
so,
implementation issues.
yeah, I mean, so there were a couple things in the draft as it came over from the House, I mean, just sort of generally, I mean, the first things you're gonna see in the draft, just looking at the order of the way it goes is that, you recall from the draft as it is from the House, gives the agency 4 positions, but doesn't actually fund those positions, and it just says you have to come back next year and request those
We
positions.
did that this morning.
But it also asks them to do rulemaking and do various things, but as we heard from the agency, they can't do any of those things unless they have positions. Well, in the
But they have
Senate,
a program anyway. Which
They-
they didn't share.
they have a division, but they don't have all.
Anybody in.
They have
Yeah.
1 person.
Right.
So in the Senate budget is $1.5 million on top of the $1.4 million that was in the House budget for education transformation.
Okay.
So the 1.5, so it's 2.9 total, 1.5 is not allocated yet. It's just there. So in this draft, I use 500,000 of it to fund those 4 positions so that they can. And since it's one-time money, they're in there as limited term positions for 1 year. And then they have to come back and ask for them for
Next year.
permanently, but at least it gives them
For the
4
government
positions to get
entities.
started. So that's part of what is in the draft. And then, as we heard from the, both the agency and actually Senator Roth Hinsdale made a reference to it, that we created a few years ago, and I don't know when, maybe John does, a facilities master planning grant program, but we didn't fund it. And this is a program to help school districts do facility master plans. So the rest,
Funded. Okay.
exactly, we didn't fund it, but this would be helpful to school districts to make the plans.
Nolan around called us on that, health and welfare.
Yeah, and I don't remember when we created it, it was,
I can find out it's somewhere between 2018 and 2021. I want to.
yeah, so it was a while ago, and we didn't fund it, or maybe we funded it briefly, but didn't keep it going. And so this would fund it, so right now the draft just plops the other $1 million into the facilities master plan. Now, I don't know if that's how much we want to put into it, but that, we had 1.5 million, so.
We need to make sure that appropriations doesn't have their eye.
Right, and I talked to Senator Perchlik and let him know that I was contemplating, I talked to Senator Bongartz also about it, so. And I wanted to talk to you before doing this, so.
We did not get the talk.
Right, so so that's part of what's in here is trying to, staff up the agency and also pay for school districts and maybe CISAs or supervisory unions to start doing some of this facilities planning to the extent, some of them already have, but not all of them. It pushes out the rulemaking, the House draft pushed the rulemaking was in March 1st of 2027. That's probably unreasonable, so it would push it to 2028. And then,
The 4 positions going to the AOE, are they all each have like a title and.
Yes.
And a purview of work that they're gonna have. and
Yeah.
That's all laid out.
Yeah, so Act 73 asked the agency for a report back on school construction and the positions they would need for the school construction division. And that report came to us in December of 2025. And it said, these are the positions we need. So those were the positions that the House put in their draft, but didn't fund. So this draft funds them.
Okay.
So those are the positions they asked for. This would fund them. And you might recall Deputy Secretary Brooks Campbell also said, hey, you should fund these facilities planning.
Yes.
grants. So this is what
It was very different.
yes. So, and then maybe, do you want me to send this to Charlotte so it can be posted if people want to look at it? Or John can pull it up? Can you actually send it to Charlotte?
Yeah,
Well, you have it. I sent it to you. Yes.
Is this on the website?
Not yet, because I just sent it to her to print because I can't print from my computer. So then there was also this rulemaking that the agency was supposed to do. We pushed the date to March of 28, but they're supposed to create rules to address the prioritization and bonus incentives for school districts to get the aid from the state for school construction. The House had put that language in, but that hadn't really defined what the bonus incentives were. So this draft tries to better define what the bonus incentives are that the agency is supposed to make rules about.
That's really important.
Yes,
So
it is. So one of the three bonus incentives that they have to make rules about are one, consolidating school governance structures. So this is sort of like, one of the carrots to merge.
That was my question.
Yep.
Are we just going to fund POD schools or is this going to be part?
Yeah, so the draft sort of walks it through like how so bonus incentives would, one for mergers or consolidation of school governance structures. They could get bonus points if they're doing that. The other is for improving access for public school students to excellent educational opportunities, including CTE, shared special education services for high needs students, and improved comprehensive curricular offerings. It could get bonus points if their school construction project is going to do those things. And the final thing that they could get bonus points for is remediating or eliminating health and safety issues. So this is the connection to the PCVs. So if part of what they're doing is, remediating that, they could get bonus points. And the bonus points are on top of the base amount, which is the base amount is, I do make changes to that too. And
We're doing this all with $1.5 million.
no, this is creating the program.
The program, but
Yeah.
it will have to be funded.
Yes, and now we'll get to that part of it. So then the House asked the state aid for school construction advisory board to do this like very comprehensive report that would have suggested where, in part, one of the things was to suggest opportunities for the construction or renovation of regional high schools. This draft greatly reduces the scope of that report. This board itself sent a letter to who did it go to? It went to Ways and Means, I believe.
it's also, I think it's posted for Senate Ed today, so.
Yeah, so Senate Ed has seen it, Ways and Means, and basically this advisory board was like, we can't do that. We're an unstaffed board, we don't have the ability to do it. So I shrunk down the report more, and also we made it clear that they will have the support of the staff that we just gave AOE in doing this. So that's in there.
What page do you want?
I'm on page 6.
Would you like for me to screen share?
Oh, yeah, sure. As I'm walking through this. Then the state aid for school construction program, we added some intent language that it is the intent of the General Assembly to clarify that the state will not offer aid under the program until the General Assembly has received the treasurer's recommendation on the total state bonding and annual debt service subsidies to be awarded under the program. So basically, until the treasurer recommends how much we can bond for, we're not going to promise that we can bond. And that the agency has operationalized its school construction division and completed rulemaking. So there's a process that has to happen.
It looks like 1.1 was.
Yeah, that's what I have.
Oh, right, it's 2.1.
That is 2 points.
This is 2.1.
I know, but on the side.
2.1 is what you printed for me this morning, Charlotte. Yeah, take 1.1 down, because that's an earlier version of it. That's okay.
I will send you 2 points.
Thank you. Thank you, John. So then, there's more intent, there's a lot of intent language. Part of it is that half of Act 73 is kind of intent language, and there's still more of it. And it's further the intent of this chapter to prioritize school construction projects that align the creation of new school governance structures under legislation passed by the General Assembly. That's this, so I didn't change this. This is the way it came over for the House, that intent language. So then the state aid for school construction program, a lot of this is current law that we passed in Act 73. And it continues, section 70, 71, 72. I didn't make changes to the this current law. The one thing I did, there are two, yes. So starting on page 11, there is a slight change. This is something that John pointed out that was a little funky in current law, that the applicant achieves a level of proficiency in the school district quality standards regarding facilities management. And this was just a self kind of like, I'm proficient, we're proficient. And so I changed it to demonstrates proficiency. They have to show that they're actually proficient, not just say that they're proficient in their application. And this is part of the application process.
This is one of the eligibility conditions.
Yeah, one of the eligibility conditions. Thank you. And then on page 12, this is tying it even further to the PCV question. So if you're applying for state aid for school construction and your school building was constructed before 1980, the applicant must complete an indoor air quality testing for PCBs that was conducted according to the DEC standards for testing. So this is further tying it to like, hey, you know, you're applying for state aid. You need to do PCB testing as part of it. And then the remediation would be part of the school construction aid that you would get in your project you would get. So this is sort of helping along the school construction and the PCB stuff. The next change.
Do you want me to talk about this?
Yeah, I don't know what this is.
So the highlighting here in the priorities, you'll recall that when I walked through the House version, I talked about some of the sequencing issues that arise from not knowing your state aid package. And just confirming the way that the authorizations for bonding work, Senator Hardy had pointed out, is really just you approve a half amount and the town may actually go out and bond for less. You're just authorizing a larger amount. So we'll come to some ballot language later in the bill that deals with the sequencing of authorizing the bond and doing your supplemental district spending ballot. But this is just saying the sequencing, there's a way to work it where you can have authorization prior to prioritization, just don't issue the bonds until you know the aid, basically.
Yeah, I mean, a lot of what John and I were talking about was like what is the order of operations here and how do we make it all work? So for example, if you have a project that you know is going to cost $50 million, but that's the total cost, but you might get $5 million of state bonding, and maybe $5 million of state aid, and maybe you get a donation of $1 million. So that brings down the cost to 39 million.
Yeah.
If I did that math right.
Yeah.
You're gonna ask the voters to authorize. I think you have to have them to authorize the full 50 million. So that's what is authorized. But when you issue the bonds, you would only issue $39 million of it.
It's like an electorally difficult.
So
position,
that's-
but
That's what I was gonna say. There's really two. So one is this is the kind of language that was used when it was routed through the capital bill. So people have done this approach before, but to your point, that's exactly what I was going to raise, which is, it does mean the voters have to be willing to authorize
Yes.
an amount that may not be what they end up paying.
But this is
More than, it's gonna be more.
This is already happens though. For example, my town approved a bond for a library that was, I can't remember the total, it was like $17 million. But then when the town went out to the voters, said, you know, we are committing to raising $6 million in private funding and getting a grant money for 2.5 million or something like that. So when the town issued the bonds, it was far less because they were able to offset it. So
I mean, it's great in the end, just how do they?
exactly. I mean, it's a communications issue. And I mean, this also happens for like wastewater treatment bonds and things
Yeah.
like that, where they get state money after the fact.
in case you don't get
Yeah.
the
Yeah.
next sequence of grant.
Exactly.
We bought it for 39 million way back when, and same thing.
Yeah. So I think it already happens, but what John and I talked a lot through was like, how do we sequence this and then do the ballot language to make it work? So, so that is so the next is page 13. Page 13. Yeah, so this is, clarifying that the school district will not issue the bonds until the secretary has notified the district of the state bonding support. So they find out what their state aid is before they issue the local bonds. And then there's a lot of stuff. That's all that. Okay, bottom of page 14. So as the bill came over to us, the base amount, this is the section that shows what the award of state aid is. And the base amount as it came over to us was 20%. 50%, right? It was current law says 20. That's what Act 73 put in there was 20. The House upped that to 50 and then upped the bonus aid to 45%. So this draft reduces the base amount to 30%. Keeps the bonus aid at 45. So the bonus aid would be based on those three things that I mentioned before, the merging, the excellent educational opportunities, and the health and safety. They can get bonus aid if they meet those things based on the rules. So the total, the most that you could get was district could get is 75% of the aid. And that would be like the next, you know, they got all the bonus points. Then top of 15, this, I'm not sure why.
So in part, this is a presentation thing just for showing while I'm drafting something is less necessary here. Formerly, subsection B in the House section had a different solution to the sequencing problem.
Oh, right.
It included language here that said funds shall not be released until you've authorized the bond. Because you've now steadied the language and said, well, you can authorize prior to this, but just don't issue the bond. This is highlighting, just indicating that language has been dropped. It will make sense to no one but me that that's what it's indicating.
Well, thank you.
That is what it is.
And then we just added the word annually. The treasurer will, in consultation with CDAC, recommend how much bonding authority in case it changes on an annual basis. Then going down to the legacy debt aid, which is on page 16. The legacy debt aid was put in there by the House for a number of reasons. One, because the foundation formula doesn't actually include debt. So it doesn't pay for debt. So districts that have current debt right now, it's not, as the foundation formula is created right now, it doesn't take into consideration the cost of the debt that a district already has issued. And secondly, it can be a barrier to merging if one district has a lot of debt and another district doesn't want to merge with them because they don't want to take on their debt. Now, of course, if you have a lot of debt, it usually means you have a beautiful building. So you're going to get a nice building potentially. So there is a cost, but the point is that the House had this set at 100% of that legacy debt be covered. I, first of all, tied this in this draft that to be eligible for legacy debt aid, and John, you might need to weigh in a little explaining on this, but this was sort of tying it to like, you have to actually be part of a merger study committee and act in good faith. except for that you
Yeah,
want
I
to
can
explain
explain
it.
this. So the concept began from extending eligibility for legacy debt aid only to school districts that act in good faith as part of the study committee process. As you'll recall, you may recall, I don't know, it's a big bill. Section 15 has a kind of final facilitator report that comes and says, here's the results of the different study committees. If you were to impose a requirement here that said they need to be, one thought I had is to try to link it's hard to make an assessment if someone's a good faith participant, right? Like you could show up and it actually is literally infeasible what is being asked of you. So when you show up, you say, we're not doing this, I'm done. Not that you're a bad faith participant, it's just that it's literally not plausible for you to participate. So it might be harder to make a good faith determination, and that's also a huge demand on that facilitator evaluation to ask, did everyone participate in good faith? It's easier to make a slightly smaller determination, which is were they a bad faith participant? So the default state, if you chose the good faith route and we're leveraging the section 15 report, is the default state would be you're not picked in and you have to be found to be a good faith participant to receive legacy debt aid. In this case, it's the opposite. The default state is you are eligible to receive legacy debt aid unless the facilitator in this report determines that you're a bad faith participant. So it changes the default state and it reduces the burden on the facilitator to make this determination. Still a question whether or not they could make it, but this was one idea as to how to try to get at this good faith participation kind of idea from the other side, which is by default, you're eligible, but you're kicked out if you just really did not participate in your study committee process.
Yeah. So it was, somehow trying to tie the legacy debt aid to the merger process and participating in the merger, but not say.
If it's a deterrent to the merger.
Yeah, and I mean, but an example, and I'm sorry to use Burlington all the time, but Burlington has legacy debt. So the legacy debt aid will be helpful to Burlington, but they might not need to merge because they're already working at scale.
Right.
So tying it to them merging isn't necessarily fair. But if Burlington would still have to be part of the merger conversation and show up and not be a bad faith actor. The end result might be that they say, it doesn't make sense for us to merge. That's not being bad faith, as John said. That's just saying this doesn't work for us and isn't necessary. But if they show up and are just like, no way, or just don't show up, then maybe they're acting in bad faith. So it's a slightly different take on it. But it's nuanced and maybe there's a better way of doing it, but this is what we came up with as we were trying to. And this also, the legacy debt aid is reduced to 75% so that it matches the aid for the new debt. So legacy debt and new debt, the maximum you could get for new debt is 75% and that matches with the legacy debt.
So that was my question on B. So it seems like the legacy debt, they get 75%, but the new debt can get up to 75%.
Yeah,
Incentive
with the
bonus.
bonuses. And so, and I think that part of this was, if we don't pay for it this way, then where's that money gonna come from? Because it's not baked into the foundation formula. The 25% that's not paid for this way could be paid for by the supplemental district spending, but it would require another vote of the voters because supplemental district spending requires a vote. So this is just trying to make it equitable. And then on the top of page 17, this is the aid that's awarded. This is essentially a categorical aid grant to pay for this legacy debt. As it came over to us from the House, this number was 61 million.
Yeah, so I think it works this way, but I also don't know what the annual variation in the debt service cost is. So the way that I have the $45.75 million figure is I just multiply 61 million by 0.75. But if they don't work out flatly in that way, right? Like if there's a variation, 75% We would need to ask the question, but I
Yeah.
think that it is this figure.
And where does the 45,750 come from?
So the initial 61 million, which is I think the question you are asking, was the estimated maximum annual impact for all existing debt service costs as of that deadline. So the worst year you could be hit was 61 million. And then this multiplied that by 75.
Where does the revenue come from to pay the aid?
Oh, I don't know where the revenue.
I think it
Oh.
would just be, it would be a line, it would be a line on the education.
Well, yeah,
fund
you-
balance.
You will recall that as I walked through the first time, I said, I don't know the revenue source from any of the.
Okay.
Yeah, I mean, it's, you know, where everything else goes.
I should say another thing about this section that's maybe not, it's not apparent here because it's in the effective dates.
Yeah,
In the House construct, this goes effective July 1 of this year, although without a revenue source. In this case, section 74 is made contingent.
Yeah.
Yeah,
yeah, this,
41 million out of the ed fund
Yeah.
this year.
no, so not in this draft, this,
No.
we make it, but
No,
This-
just mentioned that.
this section is July 1, 2030, and it's contingent like the foundation formula, so only if
Yeah.
the foundation formula and all those pieces came into effect
Yeah.
with the legacy debt aid coming on. So check that out.
yeah, almost kind of like that. It's one of the many contingencies.
By then it'll be paid down for a couple more years.
Yeah. So then on page 18, there's a lot of yellow. This is the conduct of meetings, and the ballot language for these things. And John, I'm gonna ask you to
Sure.
walk through this.
So, this is a section I wish that I had been aware of previously. And I'm sort of embarrassed that I did not know this one. You guys have seen before the ballot language for the school district budget and the supplemental district spending budget. But there is specific ballot language for school district authorization for indebtedness. And so that's what this section of existing law speaks to, and it shows the ballot that would be provided. The issue that's trying to be solved here is that earlier sequencing problem. And the kind of concept, before I get to the language itself, that's in this draft is that you would authorize the total amount of the project. That's not necessarily what's going to be issued. That'd be the first thing you do, and it would use the ballot language that you'll see shortly. Then you would receive your aid package. Once you have the aid package, you would go for a supplemental district spending vote. Bless you.
Bless you.
And then you could say at the supplemental district spending vote, because you're issuing the bonds on the basis of the aid package that you've received, what the supplemental district spending tax rate would be to cover those annual costs. To even further complicate it, you only authorize supplemental district spending tax to cover the ongoing annual debt service costs at the initial authorization. And so there's two different ballots for supplemental district spending. So we're going to see many different ballots, but this is just talking about the incurrence of the authorization for bonding. It is not the issuance of bonds. So there's a couple of cleanup changes here to reference the agency of education instead of the state board with the transfer of duties. And this is the language that's existing law. If it speaks to what happens if state aid is not going to cover all the portions of the project, and you have to include this kind of clarifying language, warning the voters essentially, that the full cost may not be covered under the formula, but you're going to be liable. And it estimates the percent of the project that might be ineligible. Again, more cleanup changes. Disclaimer that state funds may not be available and the district is responsible for all costs incurred in connection with any borrowing done in anticipation of the state school construction aid. And then here's some new disclaimer language that you have. So at the point of this, you're going out to see if the voters want to authorize indebtedness for school construction. It would say and I think it's in bold language, warning of ballots shall contain the following, set forth in boldface.
And that's current law, that word, that's from when we used to have one of this program. Yeah.
Annual debt service costs on the bond shall be raised for the district's supplemental spending tax. So you're signaling to folks, this is where you're going to be feeling this. And then any bonded indebtedness incurred for school construction shall constitute an ongoing obligation of the district that is not subject to annual authorization. So here's where you're going to feel it, supplemental tax, and you're only going to authorize it once. So don't expect to see this every year. Separately from the ballot language, including the disclaimers, there would be a public informational hearing that sets out certain information. And it would include the following factors. in existing law, it speaks to the percentage of the cost of the improvements that wouldn't be eligible for state school construction aid. And that is like the language that we saw above, right? That disclaimer to the voters.
This is included in the hearing. Is that what this is?
Yes, yes, this is information provided outside the ballot itself. And that's important to note too, because the ballot could become quite complicated.
I vote year one to authorize. And that's my supplemental spending. I make that payment every year.
Wow.
Is that my supplemental spending for the next 20 years?
You will not know the exact rate that you would be charged for the next 20 years because it would vary annually based on whatever the supplemental district spending yield is. However, I should say, we don't expect that yield to vary in the same way that the current yield does, because that yield is truly just a function of whoever the lowest taxing capacity district is. So it should be more stable is the thinking. It also varies based on your long-term membership, your student count, because that's going to affect what your per pupil spend is, which affects the way that your rate is calculated.
Basically, the payment will, with all the variations that go on, it will either be all or good part of the school's ability to spend over and above foundation for 20 years.
And that it's what the language is trying to do is signal to them, you are authorizing something for a 20-year period, and you're only doing it once. You are going to know.
We do that now.
We do it now.
Exactly. We do it now. And the difference that folks pointed out in the House, or the way I try to sympathize with the House's position on why they want a new language and for this, although it is an existing problem, is that in your current system, there's an annual budget anyway. There's always an annual budget. You may not have an annual
There's no
supplement.
cap on what you can spend
Exactly.
above any amount,
Exactly.
except what your voters say. So
Right.
that's,
And you can,
that's
and you
in your
can,
base budget, so you can ask next year for.
yep. And you can offset potentially, depending on the constraints you have, you could offset those annual costs with other kinds of expenditures. Here, you can't really do that because you're just receiving the EOP. And this is within your supplemental spending. But getting to your point, this informational hearing, which again is separate from the ballot, so this is not going to be filling out a really long ballot to confuse the voters. It's including estimated tax rates for the future. And it's saying, here's the estimated tax rate that would be required to pay annual debt service costs on the bonds under these aid scenarios. And it says if you got no aid, if you got the base aid, and if you got the maximum aid, these are the supplemental district spending tax rates you would face based on and what you see in these sets of assumptions. It is complicated, but this is trying to provide at the authorization for indebtedness all the kinds of information that folks would want to know about what they might reasonably expect their annual local supplemental district spending tax rate to be.
Okay.
So that's what
You'll have to do a lot more than one hearing to get your voters to approve. I mean, it just takes a grassroots effort.
Yep.
We are running out of time. How close?
We're almost
I can be quick. Yeah. It would notify them that even though you're seeing these estimates, it's going to vary annually. Next is the supplemental district spending ballots. So separate from the ballots for the,
Okay, I think we can
yep.
move through the ballot. Yes.
And it just distinguishes between your normal, this is your normal supplemental district spending vote. And then you'll see there's a separate vote, that one-time authorization. So that's what's set out is the two separate authorizations. And then there's just some cleanup changes. Yeah, I'm happy to stop here, but also we can of course come back to the ballot language itself.
Yeah, I mean, the ballot language looks more confusing than it is. I mean, I think it is not radically different than what kind of we do already. It's just laying out the different, what will happen when we have the spending, the supplemental district spending. And then there's the last changes are just in the effective dates about the legacy debt aid and the school district's incurrence of debt and putting those in the contingencies.
Okay, so we just, once we decide what we're gonna do in the first half, then the ballot will kind of fall into place.
Yeah, I mean, I think so. And I mean, just this was my attempt to start trying to clean up the section a lot
This
and
gives, I mean, literally, the committee of conference would say, and page 22 through 45 is schools construction, and we just swoosh on past it because all it said is, yep, we need school construction. We don't have any money.
Yes, this is fleshing it out.
So we're getting closer, and this, I think, gives it, so thank you, everybody, for that. Help, I think we have something to work on.
Good.
And now I'm gonna go back. I like it so very here. We're going back, and I'm hoping to get both of these bills out. 567 unclaimed property, state retirement system, and capital debt. And Senator Hardy, you had a proposal.
Yes, I have an amendment, which I sent to Char. Did you get it up there? Okay, it should be on our website. It's very thorough. Cameron is here if you need it, but,
We'll need a hard copy.
it is on the website, H567 amendment. It is just making some slight changes to the language that's already in statute about the Vermont Higher Education Endowment Trust Fund. It just makes it clear that the council, there's a council
Yeah,
that was created. It doesn't actually, it just says to perform the duties. Excuse me, set forth in D and E, but the duties are a little vague, so it's just to advise the treasurer on expenditures from the fund, so just adding that language. And then it adds a student of the University of Vermont or for Vermont State Colleges appointed by the governor to this council. It's a 7-member council, would add an 8th member.
that gives you an even number. Not good.
You could add 2 students. And then the council adds the council created an age. So this council shall be consulted by and provide a formal recommendation to the state treasurer and the General Assembly regarding any proposals to modify the use of the fund. So it's just they provide a recommendation. People can ignore their recommendation. It doesn't say that the legislature has to do anything. It just says that they'll get a recommendation. So if there's another proposal to build a basketball court with this money, then at least they can weigh in on whether they think it's a good idea. That's the amendment.
Committee, is Senator Chittenden on Zoom? Yes. He is on Zoom.
Sounds like a reasonable request.
Committee, what's your pleasure on this one?
I thought you wanted David to speak.
David, sure.
David is here.
Okay.
I'll try to see if there's interest. David, you want 30 seconds? So do you wanna?
I would love
I'll give you a whole minute.
The legislature could still do what it wants, right? I mean, this
Sure.
is just getting.
There is that word notwithstanding.
It's just getting input. from-
Well, and this is not, you wouldn't even have to notwithstand it because all it is a it's just an invite, like we're recommending this and then we can ignore it. Like we ignore lots of. Yeah.
We ignore it.
Study committees.
Exactly, yes.
Okay. Chair has the floor.
Thank you, Madam Chair. Record Chair, Deputy Treasurer. First off, I want to say that we don't appreciate the Senator's concern around the Vermont Higher Education Trust Fund and very much appreciate your work on the amendment. We don't have a substantive concern with the amendment, but I would like to make a couple notes. One, just noting for the record that the final section about modifying use of the fund wouldn't apply to our proposal, which did not modify the use of the fund. So it's not something that would change how our office's proposal had been brought forward. More broadly, this omnibus bill was constructed carefully with the input from every stakeholder to whom this omnibus bill might apply. And we got buy-in from every stakeholder to whom this omnibus bill might apply. That includes the Higher Education Trust Fund transfer, which we talked about a lot yesterday, talked to all the beneficiaries. It also includes the Pension Benefits Task Force, which has a number of unions and other state government and public service entities We spoke with each of those folks and got their approval. So this bill has really been a consensus construction, and the unanimous votes from every committee and the full House that considered it reflect that consensus construction. This may be an idea that ultimately gets consensus buy-in from the beneficiaries of the Higher Education Trust Fund. It may get consensus buy-in from the council that administers the endowment. But we haven't had the chance to have those discussions. It may be that in the next year or before the next legislative session, we can kind of talk about this with all the beneficiaries, with all the stakeholders, and come to a great proposal, either this one or maybe something similar. There may be other governance changes that we could make. Those are discussions that our office is happy to have. We have been in ongoing discussions with the beneficiaries of the fund for various reasons over the years, even recently, right before this session, around some more technical governance changes that were not brought forward ultimately. But the larger point being that this is a bill that's very consensus driven. The results throughout the legislative process reflect that. And we would suggest that it may be a good way forward for our office and the beneficiaries of the fund and the council members to take this under advisement, figure out a good way forward, and come back in a future legislative session with a consensus driven proposal for how to make changes that will benefit the fund and benefit the council positively.
Okay, so your concern is like the coerced debt bill. This one has been carefully constructed with buy-in from all the interested parties. And where this may seem like a simple little request that you haven't had time to run it by everyone, which means it could send it to a committee of conference and could slow the process down or not. But that's the concern.
I think that would be one way to put it. We just want to make sure that
everyone is heard.
And I think just in the spirit of how we approached it so far, our hope would be to continue to work on these issues in a consensus driven way. And again, very much appreciate and respect the senator's concern around the higher education.
Could we ask you to consider this and bring us back a report next year on any way to protect the fund?
We're certainly happy
Would that work?
to do that.
One
When
thing,
in doubt.
yeah, can I just thank you for trying to I appreciate it, Madam Chair. And I understand, like, this is your baby and you guys have nurtured it through the process, and this is one of the last stops and you're worried. I totally get that. And I know you understand why I'm concerned. I talked with the treasurer before I brought this up, so it's not like I surprised him with it. I talked to him beforehand. And one of the things you've mentioned a couple times is the beneficiaries of the fund. And I just want to be very clear that the beneficiaries of the fund are the students, not the president of the college, not the boards of trustees. They are the students. And this is really, that's, I think, gets really lost in this conversation. Is that this fund is to provide access to higher education for students in Vermont. And that has, in both the presentations of both your proposal and the other one that's on the table, the student voices have been completely absent. And that's really irritating to me. And I think it's going to ultimately not serve our students well. So I think if we have a report back, I would want to make sure that students can be involved in that, and to make sure that this is an endowed fund, and that you're not supposed to mess with an endowed fund in the ways that have been proposed this session. So if a study is or a report back is something that people can get on board with, I would just want to make sure that it's somehow that students can weigh in on that report back and that it's clear what the purpose of the fund is.
Committee. I'm not seeing a lot of enthusiasm. When we do thumbs, we'll do the McDonald method.
For what? For the amendment or for the, for a report?
Think to the report. If I can't get the report, there's no way I'm getting the amendment. To the report. Thumbs up.
Just to have them report back on any changes.
Sure.
Okay,
Cameron, can you? Grab?
Something to do, right?
all right.
I mean,
Senator
like,
Chittenden, are you up there? Do you want to chime in?
He's on.
I don't see him or hear him. Okay. Hopefully, safely driving.
I mean, I just, do you think we need to ask for a report?
I don't have a big problem with the report. I don't know if it's necessary. Sorry to chime in late.
Okay.
He doesn't know if it's necessary, is that what he said? Okay.
I just want to make sure something happens to prevent the same kind of problems.
I don't know that we can, as long as we're not mistaken.
Yes, that's fair, Madam Chair, but it's just,
We've created it, we can uncreate it.
yeah, I think just, there's a difference when it's a trust fund. It's an endowment and it literally says an
Yes,
endowed trust fund. And
I don't know if the poor state planners knew that, but
yeah, I mean,
I
it's,
think one did, but
it's, that's a different thing
Yeah.
than just creating a special fund, you know, and when you start to take money from the principal of an endowed fund, that is just incredibly bad financial mechanisms.
do we need to get an amendment and amend, or can you just agree that you will talk to members?
And students.
And next year we'll have you in, and Senator Hardy will remind us.
Well, if I'm here,
Well, if any of us are.
that's why I want language in the bill that says you have to do it. So if I'm not here, the students still have a mechanism of having their voices heard at this table.
We will be happy to do it. We will represent that we don't need the amendment to tell us to do it. I understand that's ultimately the committee's decision, but I can assure the committee that we will do it and that we will include student voices. Senator Hardy, your point is well taken about the students being ultimate beneficiaries. In trying to get through it quickly, I didn't make that point, but that is absolutely true. And it's a point that we talked about previously as we discussed the bill. So point well taken, and that would certainly be a piece of any is talking to students who have benefited from the fund and disbursement of the fund.
Okay. With that,
Sounds great.
is there a motion? We're here to approve bill.
Or not.
Or not. I think unless there's language in the bill for this, I'm happy to that on it.
Okay, Senator Chittenden, are you there and able to vote?
Yeah, yes, I am.
Okay. I think on this one, we will follow the roll. I want to make sure everyone heard. So I need a motion first. To approve as amended. Right now, we are looking at the bill, which is the one brought to us. And Maria is here by the treasurer's office, which is raising now anything less than $100 or less than $100, 10 years old and unclaimed property percentage goes to, or the whole thing, what something goes to the trust fund and the rest goes to the general fund. This would raise it any up to $150. The amount, and that doubles the amount of money. We would do that, and then a portion of that money would go into the Vermont Saves program which is the state pension managed plan that small businesses and employees can buy into or participate in. We need to get that fully capitalized. You think 6 years was, I'm doing this completely.
Yeah, the provision lasts until 2040, but we project that it will be completely self-funding by FY 33.
So, but this would get that fund capitalized, which is providing retirement savings for a lot of people who probably wouldn't start retirement savings in their 20s and 30s, and give them something to build on when they go forward. And I think that's it.
There's some more in the.
Oh, and then there's the, you can, union that it does the whole thing in changing the. Maria, are you
I'm
there?
going through the bill.
You
we
want-
voting on?
She's our motion bill. She's our next bill.
Yeah,
Cameron,
I'm here for the next bill, but I think Cameron is.
what mine
there.
is changing removing the state employees' retirement systems from the treasurer's office over to the retirement
Pension
board that manages all the other.
And you're moving just the post-employment benefits.
That's right.
trusts, which are currently under the sole and fiduciary responsibility of the treasurer. You're moving those trust funds under the Vermont Pension Investment Commission, which already oversees the state retirement.
Because
state
we
retirement.
did not have a capitalized fund, at least for teachers' healthcare. And part of the workout of the pension solution was to set up and capitalize a fund. It's now reached the point where it needs to be managed by the board that manages all the other pension funds. And it says that a state.
And then
Yeah.
the last piece is for the teachers and municipal employees. If there's a member who becomes the president of the bargaining representative for any of those employees, those employee groups, then the individual can receive service credit towards their retirement for the years that they serve as president.
They have, or the organization they represent has to pay in
Yes, ma'am.
that amount.
Yes, ma'am. And then the last piece was a very small technical amendment to the Capital Debt Advisory Committee's report to the General Assembly.
So where people are not willing to put in language about report back.
I'm willing. I'm also willing not to.
I'm fine with voting on H 567 as passed by the House.
We're trusting the treasurer's office, who we should be able to trust, I hope. Yes,
I just want to make sure.
Does a report make you a yes versus a
I-
no report makes you a no?
Yes, correct.
Then give Ruth a report.
I want to make sure it happens and I want to make sure
Cameron,
voice is involved in it.
Can you
And
have
otherwise,
us
I know.
and
You don't.
yours by
And
tomorrow?
your perfect little.
I can have you something by
presentation.
tomorrow. I will work with Senator Hardy to figure out exactly what that report should include.
Okay, then we will vote on.
Thank you, everyone.
All right, now we are going on to 753, another simple little bill. Thank you, Cameron. Now we're going to Maria. And 753 is the act relating to utility service disconnections and ratepayer predictions. We gave.
Yes. Maria Royal with Legislative Council. Yep, this is the bill we discussed yesterday. There were two proposed amendments that you considered. And then we discussed, you wanted to put some language in the report that the department is doing on utility disconnections that specifically looked at vulnerable populations and folks that might not have access to a healthcare provider, and see if you could get more information back. So I'm going to share my screen. I think I just need permission. And now I have it. So.
Okay, we get that.
Okay. So you'll see this is section 2 that's now included in the amendment, and this is the report that you'll receive back from the department doing an assessment on involuntary residential service disconnections. So the new language is highlighted. So basically in this report, it says, in addition, the commissioner shall consult with the commissioner of health, the chief healthcare advocate, and any other interested stakeholders to determine whether Public Utility Commission Rule 3.300, which is the disconnection rule, generally should include added protections for vulnerable populations, including those who have no or limited access to healthcare in the event of a health hazard, and households comprising young children or persons who are pregnant. So looking kind of specifically at some of the categories that you are thinking about adding to rule, and then also looking at, the idea of how access or lack of access to healthcare might impact Vermonters. And then in addition, finally, the commissioner shall determine whether increased outreach or disclosures are necessary to ensure ratepayers are sufficiently notified of the ratepayer protections applicable to utility disconnections.
If you're being disrupted by the arrival of fire trucks and ambulances outside the window.
Oh.
I don't know what's going on, but they're putting on their firefighter suits, but we haven't been asked to leave yet.
Fire alarm systems on fire.
Senator Benson and I can smell fire. He smelled the last one 5 minutes before the alarm went off.
They put their OBEs on there.
Yeah.
Are they?
Yeah. So no hoses coming off the front.
Yeah. Moving in. Is somebody stuck in the elevator? Yeah. He's got an axe. The elevator's out of service. Somebody's stuck. That's how they came dressed when we were stuck in the elevator in the pavilion.
Huh.
And they opened it with an axe. No one's running. They have oxygen tanks. All right, we will finish. The concern yesterday was that the utilities didn't want to know who's pregnant, who has minor children, who's what. So Dylan, this says they're going to study whether or not other vulnerable groups should be added, and I think it's to the list that you get a medical report from. So does this work?
Yes, Dylan's wiki for the record. I want to make sure I'm looking at the same draft. This is
1.7.
Yeah, I don't think we have any concerns with the study. I do note that on page 3, the language that we discussed yesterday is still in there. I assume that that is a decision point the committee would get to.
No.
Yeah, that's
Well,
the same.
Well, it's crossed out, but then added back in.
Well, yeah, so yes, I didn't know if you wanted to definitely strike this language here. Again, this is things that the commission may include in its rule, but is not required to. And the commission is not required to initiate a rulemaking right away. It actually basically says that if it engages in a rulemaking, as it periodically does with its rules, it should consider these things, or not later than January 1st, 2028, whichever occurs first. So
Okay, and to do rules, but we're asking them, can you make that a little larger?
Oh, sure.
I'm trying to see what's under the yellow. Oh, that's good, Mark. Okay. The commission, which may include a lower temperature threshold for households comprising young children, is defined by the commission of persons who are pregnant or at 62 years of age.
Yeah, so just one thing I'll mention, I didn't know if you wanted to be so specific about, there was some conversation about should it be 8 years of age? Should it be 6? Should it be another age? So I left it a little bit more open-ended.
I think the doctor's not satisfies it enough.
Yeah,
I can stand my agreement.
yeah, I think the thought was yesterday that a doctor can write a medical note that if he's got a patient who's pregnant and, you know, having difficulty, he can write a note now. It just says a medical note for anyone. We're asking them to consider what you do. But I hope if you're pregnant and have young kids, you have a medical doctor.
Well, can I just clarify one thing? Yes, all of those things might be considered under a physician's certificate. This subdivision 1 pertains just to disconnections during periods of extreme heat, right? So under the existing rule, which applies to, similarly applies to disconnections during the winter months, you know, and all of the protections, you know, between November and whatever, March, no disconnections, etc. I'm just summarizing. But in the existing rule, there is a lower temperature, or actually a different temperature threshold for households with individuals who are 62 years of age or older. So the proposal was, should there be a similar temperature threshold, more protective for persons who are 62 years of age or older? And then the new language here is, should that also apply to households comprising young children or persons who are pregnant? So again, this is just for during periods of extreme heat and what the temperature threshold should be and whether it should be different for these categories.
I'm still hoping we can accept that.
But it sounds like we're gonna have to do it. I think that.
Yeah, come on up, Dylan. And Andrea, I'll hear from you.
Thank you, Madam Chair.
Okay.
So I think what you're looking at here is first and foremost, the study, you're asking the department to report back. I think in part of their report, they may include recommendations about additional statutory changes that could deal with other populations that you may want to address here. As I articulated yesterday in conversations with my client, I think we agree that the underlying rule as it pertains to periods of extreme cold does include a separate standard for separate temperature threshold for customers who are 62 years of age or older. And so what you're doing in the bill here is taking that and applying that to periods of extreme heat. And the question is whether during periods of extreme heat, that the population that has a different threshold should be expanded. The concern, as I explained yesterday, is really that when we're talking about the utility identifying specific customers and whether or not they have specific medical conditions, retract that, specific medical situations
You
or
would
have
not normally
minor
know
risk.
if someone were pregnant.
Yes.
If there's an age for kids, you would not normally know their age, and this would require that you have to keep track of their age and know that this year you've got this, but next year they've aged out, which I assume would be a lot of keeping track, especially if these people move or don't think it's any of your business if.
Well, I think about the term of a pregnancy, right?
Yeah.
So it's usually a specific period of time.
Yes.
Relatively short.
We hope. Yes.
Right. And so would we need to know where they are in their pregnancy to determine sort of when they come off that?
Because I
road?
know
And
it not
just as
October, but if I
complicated.
don't know how far along I am, I don't know if I'm still qualifying in January.
And as a, I mean,
Okay.
point of personal reference, my wife is a nurse practitioner and therefore falls under the PUC's list of eligible providers who can write these types of notes. I asked her last night kind of whether she knew this was an option, had ever done that. Her practice has basically a standard form that they would then send off on the applications, and it does not include kind of what the medical situation is that justifies the
They're just
request. I realize that it's sort of separate from.
would be against
the-
their
the
health,
threshold,
it would be, it would be unhealthy for their health to be exposed to heat.
Yes, I'm happy to retract this amendment if it's causing undue consternation, if it's as simple as a note from a doctor. So,
I think that's what we've been hearing, and we haven't heard that there's been any problem with people having their electricity turned off during heat waves or cold waves.
We certainly share the concern, Senator, and happy to continue to think about how that might be addressed. Maybe the department's report will shed some light, but privacy concerns and what the type of information we want to have on our systems about this.
Senator Hardy.
I'm sorry, I'm just walking in on this, but
Yeah.
yeah, I don't know what's going on out there. But in the draft, this is basically about making rules, right? For these kinds of things. So we're asking the PUC to make rules. I wonder if we could just add something like in consultation with the Department of Health. Or something like that, so that.
No, they already said they don't want to be making health calls.
No, I know that, but when they're making the rule, if they are having, because there was language, I'm sorry, I don't have the thing pulled up, but there was language in the bill about making.
It's the First Amendment, I think.
Consider whether medical judgment should be incorporated.
And that we put in because we had told them. They originally said something about best medical judgment. They said they weren't making medical.
Exactly. So, and then the concerns that Senator Gulick has, and I think we all share, we want to make sure that pregnant women and young children and older folks are not overly hot or cold, but that instead of putting it on the utilities or putting it on the PUC, they get, while they're making the rule, they could consult with the Department of Health as to whether or not what the rule parameters related to health.
and they might say it's fine with the note that,
Yeah.
a note.
Committee. Senator.
What is a period of
I
extreme
am
heat?
losing committee members.
What is a period of extreme heat?
Oh,
That's to be defined.
Well, the question I'm asking, and I'm trying to lead to in a way, is maybe you just leave extreme heat, and leave all the detail out of it. Don't disconnect during a period of extreme heat. And that's assuming that periods of extreme heat, as we define it, don't last forever and are clearly defined.
That's what they do now.
Then if you do that now, why do we need to change it? Do you have so many disconnections that occur during periods of extreme heat that you have to redefine it? And that you have to involve all kinds of people in making determinations on a case by case basis?
That's
Nobody
what
has time to do.
We haven't heard any testimony that there's been a problem other than the one rogue landlord.
So if you just say that, don't disconnect during periods of extreme cold or extreme heat and define it.
They do that.
Well,
Let's-
no, I think this is updating the rule. They don't
It's-
have
yeah,
the
it's updating the
rule.
rule.
It's updating the rule to make sure.
Yeah.
I mean, I think that's a point. We could just ask them to update the rule to make sure that they don't disconnect during periods of extreme heat or the periods of extreme.
Either that or measure everybody as to whether they're a certain age or whether they have a medical condition or whether they're older than 62 years. You could do that too.
Yeah, and that's what we're doing. And
This feels like deja vu, doesn't
It
it?
sure does.
well, we have another bill that the one I'm told I'm probably not gonna take up. Which is the one about telling old people when their phones switch over, that they might want to buy $150 battery.
Is there an age limit on that one? I don't think there is.
No, but it was set because us old codgers are gonna get really confused about,
No more copper.
yeah. Going from copper to fiber. I never noticed the difference, but this is another bill where we haven't heard there's a problem.
Oh,
But we're gonna solve it anyway.
And we have been going around with the testimony is they don't during extreme heat or cold, shut off anybody's electricity. And they have no intention of doing that. So, and I think we've got enough heavy bills. I'm starting to lose committee members, I think in frustration.
no, I think he went to pick up his kids.
And
was frustrated.
yeah.
Maybe this is just one that kind of let go by the wayside here at the end of the session.
I'm not inclined to take this off the board again. Okay. Okay,
I'm sure.
I think we're done. Can you let? That we're not.